Hi friends, good morning. Welcome to your session number 2 for CA Final Advanced Auditing Marathon Revision. So yesterday we completed our session number 1. We completed over there our SA 200 series, SA 300 series. SA 200, SA 300 series is done. Now today we are having two sessions, the 5th May. One session we are having is currently 7 a.m. to basically your 12:30 p.m. In that we'll be completing all your remaining essay. Yeah, so this session I'll be completing all the remaining essay, and again I have an evening slot 5 p.m. to 10:30 p.m. In that evening slot we'll be completing SAE, SRE, SRS as well as your professional ethics. And tomorrow evening 5 to 10:30 p.m. we'll be doing all the remaining chapters. So let's begin with our SA402. We have completed 200 series, 300 series. Now moving on to the remaining standards. Chalo, give me high five everyone. A very good morning to all of you. Okay, so SA402 is audit consideration relating to entities which are using service organization. Audit consideration relating to entities which are using service organization. This essay talks about roles and responsibility of user entity auditor. So there's an entity which is using service organization. What is the roles and responsibility of a user entity auditor over here? Fine. Now, first of all, what do you mean by the word service organization? The service organization is a third-party organization which provides services to the user entity which are a part of information system relevant to financial reporting. Financial reporting. So when do I say that service organization ke services are a part of information system relevant to financial reporting? So one, they affect the class of transactions which are significant. They affect the procedure by which the transactions are initiated, recorded, processed. Okay, they affect the system which captures events and conditions which are significant. They affect the overall financial reporting process, or they affect the control surrounding journal entry. Remember this? Information system relevant to financial reporting. So if at all they are providing me services which are a part of this, then only they are a service organization as per this essay. Okay. Now, you are an auditor of a user entity, but user entity is using services of whom? The service organization. So we need to understand the nature. Of services which are provided by the service organization. What will be their impact on the financial statements of user entity, and what will be the risk related to their work. The nature and extent of the work to be performed by user auditor regarding the services provided by the service organization depends on nature and significance of those services to the user entity and relevance of those services in audit. Okay. The objective over here is you obtain understanding of the nature and significance of the services provided by the service organization. What will be their impact on user entities' internal control relevant to the audit, so that you are able to identify risky areas and then you respond accordingly. Design and perform audit procedure responsive to those risks. Fine. Now, definition may I'll take two things. One is type 1 report, other is type 2 report. Now, what is this type 1, type 2 report? See, I am an auditor of user entity. Okay, some services of user entity are performed by the service organization. Even though we are auditor of user entity, we need to obtain understanding about accounting system, internal control system at the service organization. Okay, how do I obtain understanding about accounting system, internal control system at service organization? One option is I try to get information about service organization from the user entity. If via user entity not possible, I'll try to contact service organization with reference of user entity, or I'll try to visit service organization if they allow, or I take a report from their auditor. So I am taking a report from service organization's auditor regarding not the financials of service organization, regarding the accounting system, internal control system of service organization. Okay, that report which I take from their auditor, it can be of two type 1, type 2. The type 1 report is report on description and design of controls. It's description and design. Type 2 is description, design and operating effectiveness. Acha. So under your type 1 report, the description. The description of accounting system, internal control system at service organization is prepared by the management of service organization, and the service auditor will report. What service auditor will report? The above description is accurate. The system controls are in place. I've not tested. I've not tested. And the accounting and internal control system are designed suitably to achieve the objective. Whatever is objective, based on that controls are designed suitably. Fine. Under type 2 report, what is extra is the operating effectiveness. So all other points are same. Under your type 2 report, the accounting and internal control system are operating effectively based on the result of test of control. The service auditor is also telling this. And how did he did the test of control? The description of service auditor's test of control, that also will be mentioned. Clear? Okay. Okay, complementary user entity control. These are the controls which a user entity has to maintain with regards to the services provided by service organization. The service organization provided such services to user entity. For that, user entity has to maintain certain control. That's called complementary user entity controls. Fine. Now, important over here is requirement number 1. I told you in your auditing paper, focus on important things more, because chances of that coming are more than 85 to 90%. Now, first, you obtain understanding of the services provided by service organization, including their internal control. I need to obtain understanding about the services. So they are telling, when obtaining understanding of the user entity in accordance with SA 315, you need to obtain understanding of entity, environment, internal control. You should obtain understanding about how the user entity uses the service organization. ठीक है, उसके अंदर the nature of services provided by service organization, significance of those services to user entity, nature and materiality of transactions processed by the service organization, the degree of interaction between the activities of service organization and those of user entity, and the nature of relationship between the service organization and the user entity. So try to obtain understanding of this all things. Okay? Acha. Now, you should be able to obtain understanding about the work of service organization through the user entity, but if the user auditor is unable to obtain understanding from the user entity, so we try to obtain understanding about service organization from user entity, but if it's not possible through user entity, then what do? 1. I'll try to talk directly with the service organization with the reference of user entity. If allowed, I'll visit over there. I'll take a report from their auditor, or we can arrange a local auditor who can go over there and check their accounting system, internal control system. So one is obtaining type 1, type 2 report, that is from service organization's auditor. Second, we contact service organization. Third, we visit or using another auditor, wherein we try to arrange some local auditor who go over there and check the accounting system, internal control system of service organization. Okay. Now, whenever using type 1 or type 2 report, to support your understanding of service organization, okay, so I'm using service organization's auditor's report. I need to check his professional competence if he's not a member of ICI, and I need to see whether he's independent. So, uska professional competence and independence you need to check. Professional competence only if he's not a member of ICI. Plus, I need to see the adequacy of standard under which type 1, type 2 report have been issued. Fine. Okay, if you plan to use type 1 or type 2 report as an evidence, if you're using type 1, type 2, if you plan, then the user auditor shall evaluate whether the description, design of control are as at a date or for a period. Now see, type 1 report is always as at a date. Type 1 report is as at a date. Type 2 report, operating effectiveness, they test it over the period. So type 1 is as at a date, type 2 is for a period. Second, I need to evaluate sufficiency, appropriateness of the evidence provided by the report. Okay, so evidence which is basically provided, whether it's sufficient, appropriate for me. And I need also to check if at all for the services of service organization, if user entity has to implement that complementary user entity control, so whether that complementary user entity control have been implemented or not. So this is if you plan to use type 1, type 2 report. Okay. Now based on doing all these things, you obtain understanding about the service organization. Now you identify the risk related to their work, and based on identifying risk you come out with your responses. ठीक है. Now if basically you feel that the controls, if at all you feel that the controls at service organization are operating effectively and you want to rely on it, as controls are operating effectively, I want to reduce my other audit procedure, so then in that case you could not have done it by type 1 report. How do I say that controls are operating effectively? Either I should have obtained a type 2 report, or I should have tested the control myself, or I should have used a local auditor to go and check it. So whenever the controls at service organizations are operating effectively, so you basically, the operating effectiveness should be checked by obtaining type 2 report, or you yourself going or using another auditor. Okay, fifth point is good one. So point number 1, requirement 1 was most important. Now, wherever A Limited has outsourced accounting to B Limited, B Limited has outsourced the accounting to C. So can I say C is a sub-service organization? Okay. So now the service organization is used as sub-service organization. Now, what all work is performed by sub-service organization, that will be definitely written in the report provided by the service auditor. What all work is done by sub-service organization, that will be definitely written in the report provided by service auditor, but the relevant control objectives and the control activities of the sub-service organization. What are the controls of sub-service organization? Unka control objective, their control activities, that data may be there in the report of service organization, or that may not be there. The services performed by sub-service organization definitely written in service auditor's report. But their control objective, their control activity, the control objective, control activity of sub-service organization, that may be written in service auditor's report, that may not be written. If it is written, it's called as a inclusive approach. If it's not written, it's called as carve out approach. Now, if it's a carve out approach, means the service auditor's report does not include the details about the control activities and the control objectives of sub-service organization, but the work of sub-service organization is relevant for the audit. So I need to understand how they are doing it. So then in that case, you follow the requirement of this essay. You try to obtain information about sub-service organization from user entity and service organization. Achha, if you're not able to get it that way, you can directly contact them, visit them, obtain a report from their auditor. The same thing you need to follow. So if at all they're following a carve-out approach, you can follow the requirement of this essay for the services provided by sub-service organization. ठीक है. Fraud, non-compliance of laws, regulation, uncorrected misstatement. So you should inquire. The user auditor should inquire with the management of user entity. See, I am an auditor of user entity. To inquire with the management of user entity, have they become aware about any fraud in the work of service organization? Or have they become aware about any fraud generally, or non-compliance of laws and regulations, etc. And lastly, if I'm using the report of service auditor, can I write his name? Can I write the name of service auditor that I've relied on, report provided by him? For unmodified report, you cannot write his name. Okay, for a modified report, you may write his name, but by writing his name, the responsibility is not shifted. ठीक है. So you cannot refer for unmodified, but if at all it's a modified report, and for making people understand the modification, you need to give reference of him, then you may give, but by indicating the reference, your responsibility is not reduced. Okay, moving ahead, come to question number 3. Important questions. Okay, what procedures may be considered by the user auditor? What procedures may be considered by user auditor in determining nature, extent of audit evidences to be obtained? Okay, what procedures you may do in determining nature, extent of audit evidence to be obtained in relation to balances representing assets held or transactions undertaken by service organizations on your behalf. Okay, on behalf of user entity, some assets are held by service organization. Like suppose I give laptops to them. So my laptops are lying with service organization, or there are certain transactions of mine which are carried on by service organization. Uske liye what procedures do I do? Okay, the one, I try to inspect the records documents which are held at user entity. Same way, I try to inspect records document held by service organization. Acha, whether they will allow me or not will depend on a contractual arrangement between the user entity service organization. Okay, third, I can obtain confirmation. I can obtain confirmation regarding the balances of assets lying with them or regarding the transactions done by them. I can obtain confirmation from the service organization. And fourth, I can do some analytical procedures on the records maintained by the user entity or on the reports received from service organization. I can basically try to understand whether things are fine or not. So for the balances of assets held by service organization or transactions done by service organization, I can try to inspect records which are there with the user entity. I can try to basically see the records which are held by service organization if they allow me. The contractual arrangement between user entity service organization, then they will allow me. I can obtain a confirmation from the service organization regarding this assets what they are holding or transactions what they've done, and lastly I can do certain analytical procedures. Okay, fourth one asked in December 21 exam. There's a company which has outsourced entire operations like maintenance of mobile infrastructure, customer billing, payroll, accounting, etc. Okay. How you can obtain understanding of the services which are provided by the service organization? Requirement number one. The user auditor shall obtain understanding of how the user entity uses the services of service organization, including the nature of services provided, the significance of those services to user entity, the nature and materiality of transactions processed by them, the degree of interaction between both of them, and the relationship between both of them. Clear? Okay, question number 5. There's a sub-service organization. Okay. As a user auditor, what information would you obtain about controls of sub-service organization? And they've given there are 2 alternative methods. So whenever a sub-service organization is there, service auditor's report will definitely include the details about the services provided by sub-service organization. But the service auditor's report may or may not include the control objectives and the relevant control activities which are there at sub-service organization. If it is included, it's called as an inclusive approach. If it is not included, it's called as a carve-out approach. If it's a carve-out approach there and the details about sub-service organization is not written, the control objective, the relevant control activity, and if they're relevant for the user auditor, then you need to perform or you need to basically follow the requirement of this essay. Apply the requirement of this essay for sub-service organization. Okay, question number 6. Okay, there's an unmodified report drafted. But your assistant has written unmodified report. Your assistant has written the name of service auditor. Now, unmodified report, can I give a reference to service auditor? Answer is no. So you told him to remove the reference to the service auditor because it's an unmodified report. So whether C.A. Raman is correct, answer is yes. The assistant has written the name of service auditor in an unmodified report, not allowed. This was SA 402, come to SA 450. This was SA 402 coming to 450. We are doing entire theory, all important question, 20 hours in-depth revision. Okay, SA 450 is evaluation of misstatements identified during an audit. Okay, now misstatements are of 2 types. One, which you identify. Second, unidentified. Identified, you communicate to management, TCWG, they may correct, they may not correct. Okay, identified may be corrected or uncorrected. Unidentified are always uncorrected, and unidentified will be based on your projection. Okay. Now this essay, the objective is what? To identify the effect of, to understand the effect of identified misstatement and to evaluate the effect of uncorrected misstatement. Okay, the identified one, उसको evaluate करो, and uncorrected ones you evaluate, and see if the uncorrected misstatements are material, then you are going to modify your report. So which report to be given is not here. Which report to be given will be coming in your 700 series. Fine. So this essay requirement 1, as and when the audit progresses, you keep on accumulating the misstatements which you identify, unless they are clearly trivial, very, very, very small, leave it. Otherwise, you keep on accumulating the misstatements which you identify. Acha, when the identified misstatement exceeds materiality, if misstatements have become more, you may be required to change your overall audit strategy and audit plan. Okay, so when do we need to change the overall audit strategy or plan? When aggregate misstatement accumulated will be the identified one, they exceed the materiality, or the nature of identified misstatement and the circumstances in which they happened. Based on nature and circumstances of identified misstatement, you understood there will be other misstatement, which when aggregated will exceed materiality. Okay, the identified one is not exceeding materiality, but based on its circumstances, I feel there will be more such error in remaining. And now the total exceeds materiality. Then also you'll be required to change your audit plan. So either the identified exceeds materiality, or based on nature of identified misstatement, circumstances in which they happen, there will be other misstatement which when aggregated exceeds materiality. Then you might be required to change your audit plan. Now whatever misstatements you identified, you communicate it to management first, request them to correct it. If they correct, well and good. If they are not correcting, now you have to move on to TCWG. But now you evaluate effect of uncorrected misstatement. Now remember one thing, before we evaluate effect of uncorrected misstatement, we need to reassess the materiality level. Is there any change required? So prior to evaluating uncorrected misstatement, you reassess materiality. Reason, because now I'm evaluating uncorrected misstatement, I should be sure what's the materiality level. And if that uncorrected misstatement exceeds materiality level, then I need to modify a report. Okay, so prior to evaluating uncorrected misstatement, the auditor shall reassess materiality. Objective question mein this is very important. Okay. And now you communicate the uncorrected misstatement to TCWG. Again, request them to correct it. If they correct, well and good. If they're not correcting, take it in writing. According to them, the effect of uncorrected misstatement is immaterial. That is according to them. According to them, it's immaterial. According to you, if it's material, you may still modify your report. Okay? Now, question number one, identify the sources of misstatement. What are the possible sources of misstatement? Misstatement can occur from where? 1. Inaccuracy in gathering or processing data. You process the data wrongly, uske karan misstatement can occur. Omission of some amount or disclosure, incorrect accounting estimate, judgments of management regarding accounting estimate which you feel are unreasonable. If I feel that judgments are unreasonable, that's a misstatement. Yeah, that's a misstatement. So possible sources of misstatement: inaccuracy in gathering, processing data, omission of an amount or disclosure, incorrect accounting estimate because of overlooking or misinterpretation of data, and judgments of management which we are not happy with, which auditor is considering it unreasonable. Fine. This was SA 450. Going on to SA 500. Okay, SA 500 is on audit evidence. Now, you remember, to obtain a reasonable assurance, we need to obtain sufficient appropriate audit evidence. Now, how do I obtain sufficient appropriate audit evidence? By designing and implementing my responses. Okay, so that is what is given over here. Evidence refers to information used by the auditor based on which he is making his opinion. You use information, you arrive at a conclusion, and then you give your report. Okay. Now, to draw a reasonable conclusion, basically we are required to do certain procedures. That procedures, basically the responses which we do, usse we are getting the evidence. Now, the responses are divided in following part. 1. Risk assessment procedure. Other procedures. Other procedures are further bifurcated as compliance procedure, substantive procedure. The audit procedure. Okay, audit procedure, risk assessment procedure. This was SA 315. We identify and assess the risk of material misstatement by understanding entity, environment, internal control. So here we try to identify risk area by understanding entity, environment, internal control. And based on the result of risk assessment procedure, the other audit procedures are decided. Other procedures, test of control, substantive procedure. This is basically your SA 330. Here we identified risky area. Acha. We obtain understanding of internal control. Now we test those control. Now we are testing those controls. So control test kar rahe hain, that is test of controls. Substantive procedure, we check the data produced by the accounting system. We check what? The data produced by the accounting system. And under substantive procedure, there are two things: test of details, analytical procedure. Test of details. So how do I check the data? One is by doing analysis of ratios and trends, finding out significant fluctuation. That is basically your test of detail. But if at all, that is basically analytical procedure, analysis of ratios and trends. Then that is analytical procedure. Test of detail is you see the documents, bills, agreement. That's called test of detail. Achha, under test of detail, if at all you are checking a transaction, that's called vouching. If at all you are checking any balance, that's called verification. Clear? So one is a risk assessment procedure. Based on the result of risk assessment procedure, the other audit procedures are determined. Other audit procedures will include your test of control, substantive procedure. Substantive procedure further bifurcated as how do I check that data? One, by bills agreement, that's test of detail. By doing analysis of ratio trend, that's called analytical procedures. Achha, when you're checking bills, documents, etc., if you're checking for a transaction, it's called vouching. If you're checking a balance, it's called verification. Now, the objective is to design and perform the audit procedures in such a way that you obtain sufficient appropriate audit evidence based on which you are able to draw a reasonable conclusion. ठीक है, the word आया sufficient appropriate audit evidence. Sufficiency relates to quantum, appropriate relates to what? Relevance and reliability. Okay, relevance. Relevance means a logical connection with or a bearing upon the purpose of audit procedure. There's a logical connection with or a bearing on a audit procedure. Now just imagine, I want to understand basically overstatement of trade receivable. Okay, the fake debtors are there. Overstatement. Then I can check the debtors which are recorded ones. If I am testing overstatement of trade receivable, I can focus on the recorded ones. इसमें से कोई fake है. But if I am testing understatement, if I am checking understatement of account receivable, then checking the recorded one will not going to give me proper evidence because I want to understand understatements, things which are not recorded. If things which are not recorded you want to find, don't check the one which are recorded. You need to do something else. So what is relevant? That you need to understand. Number two, reliable. The reliability is influenced by source, nature. External evidences are more reliable than internal. Evidence obtained directly are more reliable than one coming via management. Evidences which are in original are more reliable than Xerox. So they are affected by source, nature, circumstances in which you obtained, including the control over its preparation. ठीक है. And normally you rely on evidences which are persuasive. Persuasive means which convince you rather than conclusive, 100% correct. So we cannot say this evidence is 100% correct, not possible. Achha, which are the assertions provided? Assertions are the representation. Okay, the management is making a representation. Management tells that we have internal controls. The internal controls are designed properly. They are operating effectively throughout the period. So this I can understand by doing test of controls, or we call it as compliance procedure. So which assertions we get from compliance procedure? Existence, effectiveness, continuity of internal control. See, everywhere it's about internal control. Acha, management is telling we have asset, we have plant and machinery. Okay, then they're telling this machine belongs to us. Then they're telling that machine purchased is during this year. Machine is valued properly. All machines are included. So uske liye what do? I do substantive procedure. The substantive procedures will basically assure the auditor for which assertion. Assertions are representations made by management. Management is representing that asset or liability exists. They say it's our asset or our liability. The transaction took place during the period. All assets and liabilities are recorded. Nothing is unrecorded. They've been properly valued. Achha, valuation is on balance sheet date. Measurement is when the transaction took place and they've been presented, disclosed properly. So these are all assertions we get to know from substantive procedure. Okay, types of audit evidence, internal, external is fine. This is all related to your CA intermediate. Now coming to this point. When the information to be used as audit evidence have been prepared by management expert. When information to be used as audit evidence is prepared by whom? Management expert. So what I need to do? Okay, the management has hired a management expert. What I need to do? One, you need to evaluate the competence, capability, objectivity of that management expert. Don't blindly rely. Uska competence, capability, objectivity. Number two, obtain understanding of his work, the method used by him, the data used by him, the assumption used by him. And third, you evaluate appropriateness of his work for the relevant assertion. Whatever point you are checking, whether for that point, whether his work is adequate for my purpose or not. Okay, so one is evaluate competence, capability, objectivity, obtain understanding of his work, and evaluate appropriateness of that expert's work as evidence for the relevant assertion. Achha, if I have an inconsistency, two evidences are inconsistent, not matching. Sales quantity in invoice and sales quantity in outward register, they are not matching. Or do you have a doubt over reliability? Yeah, the signature stroke. I have a doubt over reliability of audit evidence. What I should do? I should perform further audit procedure. So you need to determine what modification or additions to the procedures are required to resolve the matter. What modification or addition to the procedures are required to resolve matter. Okay, what are the methods of obtaining audit evidence, also known as techniques? Also known as the techniques for obtaining audit evidence. So which are the methods I can obtain audit evidence? One, inspection. Inspection can be a physical inspection or it can be a documentary inspection also. If I do physical inspection, I get to know about the existence. Okay. Second, observation. The observation is what? Just witnessing a process or a procedure being performed by other. You witness. Achha, you observe the physical counting of inventory done by the management people. Observation. Third, inquiry. Inquiry means seeking information from knowledgeable persons both within and outside the entity. You do inquiry. And responses to inquiry are also a part of inquiry only. Evaluating response to inquiry is an integral part of inquiry only. Next, external confirmation. It's a direct written response to the auditor from the third party. It's a direct written response to the auditor from the third party. That's external confirmation. I do external confirmation of debtors, creditors, loan balance, etc. Recalculation. This is to check the arithmetical accuracy. You check the calculation, the totals, commission calculation, etc. Reperformance. You perform the procedure performed by the management again. You see, rather than checking BRS, it's more easy to prepare a BRS. So what do? You prepare your own BRS, which management has already prepared. And lastly, analytical review. You study the ratios and trends, you analyze the information, find out significant fluctuation and investigate it. Fine, moving on to important question. Question number 2. Question number 2. Okay, so inventory has been valued by management by using expert hired by them. Achha, management has hired an expert that is called as a management expert. They help management in preparation of financial statement. Okay, what factors you should do to decide whether to accept or not the findings of the work of expert? Okay, so whenever management expert has been used, what do I need to do? One, I need to evaluate the competence, capability, objectivity of expert. I need to obtain understanding of his work, and I need to evaluate appropriateness of expert's work as audit evidence for the relevant assertion. 3 things now in detail. Okay, competence, capability, objectivity, how do I understand? तो उसके लिए variety of source for competence, capability, objectivity. One, based on your personal experience with the expert. I have a personal experience, prior work I have done with expert, I can understand his competence. Okay, discussion with the expert, discussion with others, knowledge of that expert's qualification, published papers or books written by expert. Based on that, I'm able to understand the competence, capability, objectivity. Now coming to understanding the work performed by him. Okay, so for that work performed by him, I'll try to see the method, data, assumption used by him, whether they are appropriate or not. And then I'll try to evaluate whether his work is appropriate for the given assertion. So whether his work is appropriate for the relevant assertion. So I need to try to understand the consistency of expert's conclusion with my other audit evidence. With my other audit evidence, his work is matching. ठीक है. अच्छा, if the expert has used significant assumptions or method, whether that assumptions method are relevant, reasonable. ठीक है. If he has used some source data, so whether the data is accurate or not. And based on that, I can decide, okay, whether his work is suitable for the given assertion. Okay, so this were the 3 points, and then they've given or described these 3 points. So evaluate competence, capability, objectivity, obtain understanding of his work, and evaluate appropriateness of expert's work as audit evidence for the relevant assertion. Clear? Okay, question number 3. Question number 3. See, question 3 over here is, you are an auditor of Red Rock and Silver Sands Limited. ठीक है, environmental liability or site restoration की liability is there. Mr. Seetal is an independent expert for this, and it's appointed by the client. Client appointed him. Okay, it's a management expert. Client has appointed him. Here there's a question. There's no need to raise a question on objectivity of Mr. Seetal's work because we're independent. Now see, whether it's independent or not, if client appoints, you have to check the competence, capability, objectivity. The competence, capability, objectivity has to be checked. Whether he's an employee or whether he's an independent outside person, still objectivity needs to be checked. However, engagement partner is of the opinion that team needs to evaluate objectivity of the expert engaged by the entity, irrespective of the fact that he was an independent expert. He is not an employee, independent person. Still, you have to check objectivity correct. So guide the partner and Mr. Shreyans with regards to this thing. So SA 500 told that whenever there's an expert appointed, you need to check his competence, capability, objectivity. Acha, now threats. The circumstances that may threaten objectivity. Remember the 5 types of threat: self-interest threat, advocacy threat, familiarity threat, self-review threat, intimidation threat. So because of this threat, you may not be remaining objective. ठीक है. And employee है तो objectivity to be tested. Employee नहीं है, no need to test objectivity. No. You need to check the objectivity. So over here, they've appointed basically Mr. Sheetal as independent expert. Audit team is of the view objectivity cannot be questioned because he is basically independent thing. Partner ka view is contrary. The audit team should evaluate objectivity. Should evaluate objectivity. Did you understood? The partner's view is correct. Okay, question number 4. Question number 4. Acha, there is already a management expert. Management expert is there. Now, what should be the nature, timing, extent of audit procedure for me? The nature, timing, extent of audit procedure in relation to work performed by management expert may be affected by certain matters. Okay, management has used management expert. Now, what should be the nature, timing, extent of my audit procedure? It will depend on 1. The nature and complexity of matter, the risk involved, availability of other sources of evidences. Okay, nature, scope, objective of management expert's work, whether he was an employee or an independent person, extent to which the management can influence, control or significant influence over the management expert. Then the auditor's knowledge and experience about the management expert ka work, your previous experience with that expert. So based on all these things, I'll decide what other procedures I need to do. The nature, timing, extent of my audit procedure will depend on. They already used management expert. Now, what should be my procedure? It will depend on the complexity of matter, the risk involved, alternative evidence is available, not available, available hai, then I'll do it. Okay, nature, scope, objective of management expert, whether it's an employee or an independent person, whether management is able to influence him or not, my experience about the expert's work, my prior experience with him, all that things. Fine. Okay, 7th. You are unable to obtain sufficient appropriate audit evidence. State how you should proceed to obtain further audit evidence. Now, question is not which report to be given. Question is how you will proceed to obtain further audit evidence. Answer is the methods of obtaining audit evidence. आंसर क्या है? Methods of obtaining audit evidence. Okay, question number 8. Risk of material misstatement at an assertion level for a class of transaction, account balance, disclosure. Okay, for a class of transaction, for an account balance, and for a disclosure, risk of material misstatement is to be considered. State different categories of assertion used by auditor. Remember assertions kya tha? Representations by management. Okay, if I'm checking a class of transaction, which all representations I have to check? If I'm checking a account balance, if I'm checking a disclosure. Okay, if I'm checking a class of transaction, transactions are for the period. Balance is at the end. Okay, so which assertions do I check for a transaction? Transaction occurred during the period. All transactions are completely recorded, accurately recorded. Accurately recorded. Acha, period in which they are recorded is proper. That's called cutoff. And last one, classification. They've been recorded in a proper account. Ye accuracy was amount. Okay, so regarding class of transaction, which are the assertion? One, occurrence. Transaction has occurred during the period. It relates to the entity. Completely all transactions have been recorded. They have been accurately recorded amount wise. Acha, period wise they have been properly recorded, cut off, and account wise they have been accounted, they have been recorded in a proper account. That's called classification. Okay. Now when I'm checking balances, which all assertion? Balance, asset or liability ka balance. Okay, so asset or liability exists. It belongs to the entity. So it's a right. Asset is a right of entity, liability is obligation of entity. All assets and liability have been completely recorded and the valuation of them is done properly. Clear? Now about presentation disclosure. See, presentation disclosure mein the transactions are also disclosed, the balances are also disclosed. Actually it's kind of combination. Transactions are also disclosed, the balances are also disclosed. So we have to check what? Which assertions do I need to check? Everything. Occurrence as well as existence, rights and obligation, completeness, accuracy, valuation. So they have been accurately recorded. Balance ka uska valuation is done as per the AS or Ind AS. And last they've written one extra is classification understandability. So the thing is the disclosures are clearly expressed. They are properly, appropriately presented, disclosed. It's classification understandability. Are you clear with this? Are you clear with this? This is SA 500. Now going to 501. Keep smiling, pay attention. Important is basically your discipline. So it should not be like, okay, 1 or 2 essays I attend, then I feeling bored, again I go away, I come back. No. That way revisions don't happen. Keep on replying, involve yourself. Okay, now SA 501 is audit evidence, additional consideration for specific item. Now see, normally all your standards are kind of general in nature. Like if they say that a risk relates to many items, come out with overall response, risk relates to one item, come out with responses specifically for that item, but they don't talk about particular item. Did they tell you how to check debtors, how to check creditors, how to check inventory, how to check sales, how to check purchase? No. But this essay is specific, talking about 3 things. This essay is specific, talking about 3 things. 1. Attendance at physical inventory counting. Inquiry regarding litigation and claim. And third one is segmental information. Okay, coming to the first one, attendance at physical inventory counting. Now see, physical verification of inventory is a responsibility of management. Okay, the auditor should obtain sufficient appropriate audit evidence about existence and condition of inventory. How? How to obtain sufficient appropriate audit evidence about existence and condition? By attending the physical inventory counting so as to. Why you should attend the physical inventory counting? So that you are able to evaluate the management instruction and procedure. You are able to observe the performance counting done by the management. You can inspect the inventory. You can perform test counts. So you need to obtain sufficient appropriate audit evidence about existence and condition of inventory by attending the physical inventory system. Inventory counting. Management will be doing it. You have to attend. ठीक है, and you perform audit procedures over the final inventory record. Final inventory record, whatever is coming, you perform audit procedure to see that these are the actual counts which were there, to determine whether they reflect the actual inventory counts. ठीक है. Now suppose if you are doing a physical counting at a date other than the balance sheet date, if you are doing it on 31st March, that inventory will come in balance sheet. But if you are doing on other date, what we need to do, so we need to check for the changes which happened between that day till the date of balance sheet. Okay, so you need to obtain evidence about the changes in inventory between the count date and the date of financial statements. Achha, for that you try to look whether perpetual inventory system, the records have been maintained. तो try to see perpetual records are maintained. तो उसके लिए तो physical inventory counted on say 28 March, so I need to look for 28 March to 31st March के changes. So from that perpetual records I'll be able to understand. So perpetual records are properly adjusted, whether they are reliable or not, and if there is a difference coming. Acha, 28th March in books is this, 28th March physical was this. If there's a difference coming, so try to obtain basically the reason for significant differences. Acha, now you should attend physical counting of inventory to obtain sufficient appropriate audit evidence about existence and condition. But sir, suppose counting is not practicable only to be attended. Achha, this was if you are doing it on other date, but suppose if it is unpracticable only, impracticable. Suppose it's impracticable. For example, the godown is in border areas, borders mein there are issues, border is sealed currently. They're not allowing you to visit over there. If it's impracticable, what do? You perform alternative audit procedure. But just inconvenience hoga. Inconvenience hoga is not impracticable. So over here, the matter of general inconvenience is not considered as impracticable. And now there will be a difficulty or time or cost involved will be a bit extra. That is not a substitute for no other procedures available. When no other procedures available, you have to do it. You cannot say no, I'm not doing it. Alternative, hey, you may do it alternative, but if there's no alternative available, you have to do it. And if you're unable to obtain sufficient appropriate audit evidence about inventory because you're not able to attend, then you are required to give a modified report as per SS 705. And fourth over here is when inventory is lying in the custody of third party. Okay, so inventory is lying in custody of third party. If it's material, what do? One I need to do is the confirmation. The one you do external confirmation, and you may do some other audit procedures which are appropriate. Achha, the external confirmation with third party, other audit procedure. Which is the other audit procedure? You yourself go and check over there, or you arrange a local auditor to go and check over there. Achha, obtain a report from their auditor regarding accounting system, internal control system. Inspect the documentation regarding inventory, and if they have also pledged it somewhere else, I gave it to third party has given somewhere else, so then you take a confirmation from that party where it's actually lying. So this is what you can do if it's lying with third party. Now see how many questions can come over here. 4 different. 1. How do you obtain sufficient appropriate audit evidence about existence and condition of inventory? That's one question. Second, if you're doing an inventory counting on other than the balance sheet date, what to do? Third one, if it's impracticable to do inventory counting, what to do? And fourth, if inventory is lying with third party, what to do? The 4 separate questions can be coming over here. ठीक है. And take a representation from management regarding the completeness of information provided and adherence to the laid down procedure. Moving ahead, B part is inquiry regarding litigation and claim. See, litigation is something which has basically reached court. Claim is something which has not reached court. If litigations and claim, they result in a probable. If they are probable, then we need to make a provision for it. If they are possible obligation, we are required to disclose them as contingent liability. Now, what are the audit procedures to identify litigations and claims? To identify litigations and claim, what you need to do? 1, you need to inquire with the management, including the in-house legal counsel, etc. उनके साथ inquiries करो to understand litigations going on, the status, etc. Second, review the minutes of the meeting of TCWG, correspondence with the basically legal counsel external. So if they have some letters, or mails sent to the external legal counsel, or basically the meetings of board of director. If some important litigation is going on, they would have discussed about it in the meeting. Review the legal expense account to understand what all payments are done to lawyers, etc. Acha, you may also try to seek a direct communication with the lawyer. Acha, for that purpose, the letter should be on management's letterhead. The letter should be prepared by the management. उसमें लिखा होगा, the letter will be on management's letterhead, telling the lawyer to communicate about the litigations and the status of it directly to the auditor. The auditor should maintain control over the process. The letter should request the lawyers and such professional to communicate about the litigations directly with auditor. ठीक है. So I want to communicate with the entity's lawyer. If I send a letter directly, they are not going to reply. It should be from management side, and it should be told in the letter that now onwards you communicate directly to the auditor. ठीक है. If management refuses, they don't allow you to basically communicate with lawyer, or and you're unable to obtain sufficient appropriate audit evidence by alternative procedure, so they don't allow you to basically communicate with lawyer. Other procedures are not giving me sufficient appropriate audit evidence. I am unable to obtain sufficient appropriate audit evidence. I will modify my report and take a representation regarding completeness and adequacy of information provided. Third one over here is a segmental information. Third one over here is a segmental information. Okay, now as per your accounting standard 17 or Ind AS 108 operating segment, the segmental information is to be provided in notes to accounts. So as an auditor, we need to obtain sufficient appropriate audit evidence about the presentation and disclosure of segmental information. See, for inventory, the word was sufficient appropriate audit evidence about existence and condition. Here it is sufficient appropriate audit evidence about presentation, disclosure of segmental information. Okay, for that, what do I do? How do I obtain sufficient appropriate audit evidence about presentation, disclosure of segmental information? One, by obtaining understanding of the method used by the management in determining segmental information. Evaluate the methods used is as per applicable financial reporting framework, and you also test the application of that methods. ठीक है. So obtaining understanding of the method used by the management, and you perform analytical procedure, other audit procedures which are appropriate in circumstances. Achha, they don't want you to do a detailed audit because you're not reporting on segmental information, you are reporting on overall financial statement as a whole. So they don't want you to do a kind of a detailed audit, but you do an analytical procedure, other audit procedures, whichever you deem appropriate. ठीक है, तो which are that other audit procedures? उसके related. अच्छा, and now whenever I am trying to understand or when I am trying to evaluate the method used by the management, so examples of matters which may be relevant. Examples of matters which may be relevant when you are obtaining the method used by the management for segmental information. So which are the matters which are relevant? So one, sales transfer between segment, elimination of inter-segment amount. So how has the management dealt with inter-segment transfers? Have they eliminated the inter-segment transfers, etc.? Okay, second, budgets. Acha, so they had prepared budget basically segment wise, and now actual comes. So comparison of budgets and other expected result. Allocation of assets, cost, common assets, how are they allocated, etc. And consistency with prior period. The segmental information has been prepared consistently. Last year how it was prepared, now also it's prepared same way. Adequacy of disclosure, that. So which are the matters which are considered in evaluating the method which is used by the management for segmental information? So which matters? One, sales, inter-department, inter-segment transfers, elimination of that. Second is comparison of budgets with an other expected results. Third, the allocation of assets and cost. And fourth one is consistency with prior period, adequacy of disclosure, etc. Clear? And take a written representation about completeness of information provided, appropriateness of segment selected, business segment, geographical segment, they have selected it appropriately, and the organization structure, the hierarchy. If I get to know about hierarchy, then I'll be able to understand basically the segments. Okay, coming to question number one. What are the matters which are relevant in planning attendance at physical inventory counting? Acha, when you're planning attendance at physical inventory counting, what matters are to be considered? The nature of inventory, the stage of WIP, risk kitna hai, the internal controls, how are they, the timing, whether a perpetual inventory system is there or not, whether we need the work of other auditors, branch auditors required to basically check at branches, whether we need an expert or not. These are the matters we consider while planning inventory. Planning word is important. Okay, moving ahead. Question number 4. Okay, question number 4. See, many times it has been asked. Many times question number 4 has been asked. Okay, check question. How sufficient appropriate audit evidence regarding existence and condition of inventory may be obtained by attendance at physical inventory counting? By attendance at physical inventory counting, so I have to explain that point. Achha, second, when the physical counting is impracticable, what you should do? You should do alternative procedure. But if alternative procedure say you're not able to obtain sufficient appropriate audit evidence, you modify as per SA 705, and inconvenience hoga, it is not termed as practicable. वो impracticable नहीं है if it is general inconvenience वाला thing. The two questions basically are asked. So one is basically you obtain sufficient appropriate audit evidence about existence condition by attendance at physical counting, so that you are able to evaluate all these things, and you also perform final inventory records. Are they having the actual inventory count or not, that you see. And second wale mein, if it's impracticable, what to do, we already saw. Okay, question number 6. Okay, question number 6 over here. What is your duty to ensure that the stock lying with third party actually belongs to the company? What do I do? One, I can do external confirmation. Second, I can do some other audit procedure. Myself attending or sending someone over there, or telling their auditor, unki auditor ko, to send a report about their accounting system, internal control system. Other document receipt like warehouse receipt, etc. can be checked. So this was the answer. Question number 7, segmental information mein, we need to obtain sufficient appropriate audit evidence about presentation disclosure of segmental information. For that, we try to evaluate the method used by the management. Acha, examples of matters which are relevant. Yeah, the 4 point. वो sales, inter-segment transfer, then basically comparison of budgets. Third one was how cost and assets are allocated and whether it's prepared consistently with the prior period and adequacy of disclosure. So which are the examples of matters that may be relevant when obtaining understanding of method used by management? For 4 points, answer has to be 4 points. If you write generally, don't expect marks in auditing. Questions are very specific. Answer also has to be specific. Okay, next one is SA 505. Are you enjoying? We are doing it in detail. Please make sure you attend properly and also share about these videos to all your friends as well. Acha, someone has taken coaching from me, not taken coaching from me, it doesn't matter. This revision is definitely going to be helpful to all of the students. And give me high five. It's a slap. Patak. Now, coming to SA 505, which is on external confirmation. Now, we know that external evidences are more reliable than internal evidences. The external confirmation is one of the way. It is one of the way of obtaining external evidence. Okay? Now, see, if you do external confirmation, you don't get sufficient as well as appropriate audit evidence. You're doing one thing. One thing can never be sufficient. So, objective over here is to obtain relevant and reliable audit evidence. To obtain relevant and reliable, that means appropriate. One thing can never be sufficient. Clear? Okay. Now, where do I generally use external confirmation? It's generally used to confirm the balances. But it can also be used for other purposes as well, like to confirm the terms of agreement. Is rate of interest 9%? So that can also be, have you given PPE as security? So I can do that way also. So generally for account balance, but can also be used for other items as well. This is where we use external confirmation. Now assertions which we get from external confirmation. Whenever you're doing external confirmation, which all assertions basically you get? Now pay attention. Different assertions basically you get to understand by doing external confirmation. If you do a confirmation of debtor, if I'm confirming debtor, I get to know about existence. Somebody replied debtor is there, but I don't understand whether it's a good debtor or doubtful debtor, how much provision required. He replied, I have to pay 5 lakh rupees. Whether he'll pay or not, that we don't understand. So you are able to understand the existence, but not the valuation. Okay, process of external confirmation, very simple. Determine the information to be confirmed. What I want to confirm, say debtors. Achha, in that, select the confirming party. Which debtors? Select the confirming party. Okay, design your request. Make sure there's a line written in the letter that the reply should come directly to the auditor. So see, external confirmation is direct written response to the auditor from the third party. That's external confirmation. So there should be a line basically telling that the reply should come directly to the auditor. And fourth one, you send the request. If reply doesn't come, do the follow-ups. Okay, process. Now timing. This is important. When should I do external confirmation? Either you do it at the balance sheet date or any other date which is reasonably close to the balance sheet date. Achha, at the balance sheet date or any other date which is reasonably close to the balance sheet date. Now sir, why reasonably close to balance sheet date required? Reason. If at all you're doing it, say for example on 1st of January, then I have to check for transaction between 1st January to 31st March. That will be very tedious. So either you do on 31st March or nearer to 31st March, so that the adjustments will be very less. Either at date or reasonably close to that date. And if at all you do on other date, you need to check the transactions which occurred from that date till the financial statement ka date. Now design in form of confirmation request. The design of confirmation request should be such that you are able to meet your audit objective. It can be normally two ways: positive confirmation request, negative confirmation request. Under positive confirmation request, the respondent is required to reply mandatorily, whether agreement, whether disagreement, he has to mandatorily reply. Negative confirmation request, the respondent is required to reply only when there is a disagreement. Achha, the positive confirmation request, if reply doesn't come, I have to do alternative procedure. Negative confirmation request, if reply doesn't come, I assume the balance is tallied. Practically, it will be wrong. So negative mein reply doesn't come, we assume the balance is tallied. Practically, it will be wrong. It's always better to go for positive confirmation request, and that's why SA also says, important, SA also says you should not use negative confirmation request as a sole substantive procedure. You should not use negative confirmation request as a sole substantive procedure unless all the following are present. If all the following are present, then you may do negative confirmation request as a sole substantive procedure. Otherwise, don't do it. Now, which are all the following present? You have assessed the risk of material misstatement as low and the controls are operating effectively. Okay. The population consists of large number of homogeneous items. Exception rate, chances of disagreement are very low, and you are not aware of circumstances which would cause the recipient to disregard your request. You requested the recipient to reply, balance doesn't tally, and you feel they will reply. If you feel they are not going to reply, even if the balance is not tallying, then don't go for negative confirmation request. So don't use negative confirmation request as a sole substantive procedure unless all the following are present. Risk of material misstatement low, you check the internal controls. 2. The population consists of large number of homogeneous items. 3rd, exception rate, chances of disagreement are very low. And 4th one, over here, they are telling you are not aware of any circumstances wherein the recipient will disregard your request. Okay. Now, the reliability of external confirmation, how much I can rely on external confirmation depends. It depends on 1, the control which you exercise over the entire process. If you made sure the letters are addressed properly, the letters are posted properly, then you can rely more. because many times this letters will be on management's letterhead. The letter will be on management's letterhead, then only the other party will reply. But if I exercise control that they were prepared properly, couriered properly, then in that case reliance will be more. So how much control I exercised? Okay, the characteristic of respondent, how are the respondent, and any restriction which management put on you. ठीक. अच्छा, if management refuses not to send a letter of confirmation to a particular party, try to understand the reason. ठीक है. Evaluate implication of management's refusal on your relevant risk assessment. अच्छा, तो try to understand reason. उसके कारण now if they are trying to refuse me, तो try to assess the relevant risk of material misstatement over there. Try to do alternative procedure. Try to do alternative procedure. अच्छा, तो sometimes what happens, it may be a genuine reason also, like a litigation going on with that person. If we try to confirm, he will not basically agree. He will say no, balance not tallied. And one more thing, in court of law also he will say that your auditors are sending such a letter, or why are you sending such a letter. So sometimes there may be a genuine reason also, and if you are agreeing, then in that case you have to do alternative procedure. But suppose if it's not a genuine reason, and you want to send the letter of confirmation, they don't provide you detail, it becomes a limitation on scope. After the audit is accepted, you will be modifying your report as per SA 705. Clear che? Yes, no? Okay, going on to illustration number 1. What are the factors to be considered when designing a confirmation request? So when I'm designing positive confirmation request or negative confirmation request, which factors do I consider when designing? One, the assertion being addressed. Risk kya hai? Layout and presentation. Prior experience. The method of communication. How management is encouraging the confirming party to reply. The management's authorization or encouragement for the confirming parties to respond, and ability of the intended confirming party to confirm or provide the requested information. Whether I should go for positive or whether I should go for negative confirmation depends on the assertion, risk kitna hai, prior experience, communication ka method, how management encourages the confirming party, ability of the confirming party. This all things pe it depends. Okay. Now see second question. Both the question very similar. First one was factors to be considered for deciding whether I should go for positive confirmation or negative confirmation. Here, factors that may help you in determining whether I can use external confirmation. अच्छा, तो whether external confirmation procedure should be used or not. वहाँ पे था whether I should go for positive or negative. Here, whether I should go for external confirmation. Whether I should go for external confirmation or not, it depends on one, the confirming party's knowledge of subject matter. If confirming party who is replying doesn't have a knowledge only, imagine Pune signs and gives it to you. He doesn't know only what is it. Then you can't rely on this external confirmation. So whether I should use external confirmation depends on the confirming party's knowledge of subject matter, the ability or willingness of confirming party to respond. Acha, so one, they should have a knowledge, they are basically willing to reply, and objective. So whether they'll be able to reply independently without any bias. The simple words, whether I should use external confirmation depends on confirming party. Confirming party ka knowledge of the matter, confirming party ability or willingness to respond, and the objectivity of intended confirming party. Okay, question number 4. Question number 4. Okay, during the course of audit, auditor received some information and there is a old outstanding debtor. You try to basically do a negative confirmation. Old outstanding debtor is there or creditor is there. You are trying to do negative confirmation. Reply is not received. Now, normally under negative confirmation, whenever reply not received, we assume the balance is tallied. But here it's an old outstanding creditor. Reply not received, treating it as balance tallied will be wrong. Better you should do some alternative procedure. Alternative procedure will be like subsequently whether the amount has been paid after year end till the books are approved. So that you can check out. Okay, the failure to receive a response to a negative confirmation request does not explicitly indicate the receipt by confirming party. It doesn't mean that he has received the letter and the balance is tallied. Sometimes he may not have received the letter only, and that's why the reply has not came. So to assume that the balance is tallied will be wrong over here, and here it's basically a long outstanding. It's a long outstanding. Okay. And this line, try to understand. A failure of confirming party to respond to a negative confirmation. Negative confirmation means if he is not responding, provides less evidence than a response to a positive confirmation. See, positive confirmation में reply आया. Okay. Positive confirmation, he replies, balance is this. That's more better evidence. Negative mein reply doesn't come, you assume balance is tallied, but that's not that much. Positive mein someone replying is more better than negative mein someone not replying. Positive confirmation, someone replying is more better evidence than negative mein not replying. ठीक है, तो what you should do over here? So the auditor send a negative confirmation request for this old outstanding balance, and in case of non-response you're not getting, you may examine subsequent cash disbursement, whether subsequently the amount has been paid later on or not. That you can check out. And if you have a doubt over the reliability of responses, then also you should look for further audit evidence. Imagine reply came but you have a doubt, reply came but you have a doubt, then also you should do some further audit evidence. Okay, question number 5 is similar. Old outstanding, there you went for negative confirmation request, it's similar. So SA 505 negative confirmation request mein you request the confirming party to reply only if there is a disagreement, and it gives less persuasive evidence than the positive confirmation. ठीक है. Failure to receive response does not explicitly indicate that he has received it. अच्छा, उसका reply नहीं आया, तो you can't assume he has received the letter, balance tallied. No. Sometimes it may happen he has not received the letter only. It may happen that he has not received the letter only. And that's why basically over here, better is you should do something else. Examine the subsequent cash disbursement. Fine, moving ahead. Question SA 510. Okay, so we did 402, 450, 500, 501, 505. Now 510. Okay, SA 510 is initial engagement opening balance. Achha, what do you mean by the word initial engagement? When the financial statements are audited for the first time, or previously they were audited by another auditor. Financial statements are audited for the first time, or previously they were audited by another auditor. Whenever it is an initial audit engagement, we are required to check the opening balances. Opening balances are the balances which exist at the beginning. They reflect the transactions of preceding period and the policies followed in preceding period. Okay. Now what do I need to check about the opening balances? 1, they have been correctly brought forward. Second, they do not contain a material misstatement. See, whatever was there last year, same brought forward. This year it's correctly brought forward, but it has a material misstatement. Like last year closing was only wrong, so this year opening is also wrong. It's correctly brought forward, but it has a material misstatement. There should not be a material misstatement also, and accounting policies are consistently followed. Okay, audit procedures mein the first one is important. What do I need to do? 1, you read the most recent financial statement. You read the most recent financial statement as well as the audit report of predecessor auditor for the opening balances. Now you need to obtain sufficient appropriate audit evidence that the opening balances, whether it contains a material misstatement or not. So I need to check it should not contain a material misstatement. So for that, what do I do? So 1, you try to check what was the closing last year, what is brought forward this year. Is it matching or not? Acha. Appropriateness of accounting policies, because opening balance reflects the policies used in past, so whether it was appropriate accounting policies followed in past, and you can use one or more of the following. This is important. You can use one or more of the following. Okay, so whether opening balance contains a material misstatement, for that what should I do? if the financial statements were audited by another auditor, I can peruse, go through the copies of audited financial. That's one. Acha. Second, whether audit procedure performed in current period. Some procedure performed in current period, that will help you to understand whether opening contains a material misstatement. Now, sir, how? For example, if I check collection from debtors, so I was checking collection from debtors, I got the collection this year, so I can understand opening debtors would have been genuine, that's why collection came. Okay, payment to creditor happened, so I can understand opening creditors will be proper, that's why the payment is done. So some procedures of current year basically will help you to understand whether opening is fine or not. And third, you can do any specific procedure related to opening balance. Okay, if they were audited, you can go through the audited financials. Second, you can basically try to see current year procedures will help you to understand opening is fine or not. And third one is you can do specific procedure related to opening balance. Okay, now pay attention. For current assets, current liabilities, some evidence about opening balance, you can get it from current year audit procedure. Like collection of debtor represents opening debtor was fine. Payment to creditor represents the opening creditor was fine. But inventory mein, current year closing inventory doesn't give evidence that opening inventory was fine. So current year closing inventory provides little evidence about the opening inventory. तो उसमें you have to do something else. You do a rollback procedure. Closing inventory this way the transaction during year. तो opening क्या होगा? That's called a rollback procedure. Performing some audit procedures on valuation, try to see cutoff, etc. So you need, तो वहाँ पे inventory में it will not work. Same way for your non-current assets and liability. For non-current assets and liability, what you can do? You can examine the accounting record and other information relating to opening balance. Like PPE hai, to do one thing, you can check the bill of PPE and depreciation till that opening. That, acha, you have loans and advances, you can do external confirmation of loans and advances at the beginning. Opening external confirmation can be done. So that way you can carry out any additional procedure specific to opening balance. Acha, if at all auditor obtains audit evidence that opening balance contains a material misstatement. When you are checking opening, you found okay, it may contain a misstatement and it can affect current period also. You need to communicate about it to the appropriate level of management. Now, if prior period financial statements were audited by other auditor, there was a modification. Last year audit was basically performed by someone else. He has given a modified report. Try to evaluate with what implication will it have on the current year's figure. Evaluate the effect in the current period's financial statement. Okay. Now going to your reporting conclusion. If you are unable to obtain sufficient appropriate audit evidence about the opening balance, you give a modified report, either qualified or disclaimer of opinion. Unable to obtain. Acha. If you checked opening balance and you found out there's a misstatement in opening balance, you checked opening balance, you identified there's a misstatement in opening balance, and then what do? There's a misstatement in opening balance, then you are required to give either a qualified or an adverse opinion. You checked it, you found there's some misstatement. Okay. If you feel accounting policies are not consistently applied, or there's a change in accounting policy but it is not properly reflected or accounted, then in that case again you're required to give a modified report, qualified or adverse. Clear? Acha. Whenever I say opening balance also includes the contingent liability. The opening contingent liability also you're required to go through. That is also a part of opening balance. Okay, question number 1. Question number 1. CA Asutosh has been appointed as auditor of Awesome Health Limited and for the financial year 2017-18, which was audited by CA Amravati. ठीक है. State the steps Ashutosh should take to ensure the closing balances have been brought forward and it does not contain a material misstatement. It's your requirement number 1. The answer is basically this. The audit procedure में opening balance. Okay, so you need to obtain sufficient appropriate audit evidence that the opening balance whether it contains a material misstatement affecting current period. तो उसके लिए what do? See whether they've been correctly brought forward, examine the appropriateness of accounting policy, do one or more of the following. If they were audited, peruse the audited financial. Some procedures of current year can help you, or you can do any specific procedure related to opening balance. This is your answer. Okay. Question number 2. Okay, what if they were audited by someone else? If they were audited by someone else, I can go through the copies of audited financial statements. And you can place reliance on the figures given by the previous auditor. And what if they're audited first time? If they're audited first time, some procedures of current year will help you, or I can do any specific procedure related to opening balance. ठीक है. Acha, what if you are not satisfied about the correctness of opening balance? You are unable to obtain evidence, you will give a qualified or disclaimer. But if you find a misstatement, you will give a qualified or adverse. This is SA 510 going to 520. Keep smiling. Woo! Going to SA 520. Okay, SA 520 is on analytical procedure. Analytical procedure is what? Analysis of ratios and trends, finding out significant fluctuations, investigating them. Now, the definition given by them is it's evaluation of financial information. You evaluate financial information through analysis of relationship, ratios and trend. And it's among financial as well as non-financial data. And it also includes investigation which is necessary for the identified fluctuations or relationship which are inconsistent. So it is evaluation of financial information by analysis of relationship amongst financial as well as non-financial data, and whatever inconsistency you find out, you investigate. That investigation is also a part of analytical procedure. Achha, analytical procedure is helpful at all the stages of audit. 1. Planning time. You do analytical procedure, wherever variations are there, you plan more. Second, as a substantive procedure. Achha, remember, a substantive procedure includes test of details, analytical procedure. So I can obtain evidence about the data, transactions, balances by test of detail as well as analytical procedure. And third, at conclusion stage, whenever you are basically forming an overall conclusion, whether the financial statement are consistent with auditor's understanding of the entity. Okay, that's helpful at all stages of audit. Now, analytical procedures, you're doing just analysis of ratio trend. It cannot give you sufficient audit evidence, but it can give you relevant and reliable, appropriate audit evidence. So see the objective. To obtain relevant and reliable audit evidence when you're using substantive analytical procedure. Achha, if they use the word analytical procedure, or if they use the word substantive analytical procedure, it's same. Analytical procedure is a part of substantive procedures. That's why it's called substantive analytical procedure. And now there are two objectives. One, to obtain relevant and reliable audit evidence. And second, you need to design and perform analytical procedure nearer to the end of audit so that you are able to form your overall conclusion whether the financial statements are consistent with the auditor's understanding of entity. Okay. Now, how do I do analytical procedure? I compare with prior period, I compare with budgets, I compare with industry standards. My prior period, budgets, industry standard, and it can be amongst financial data as well as non-financial data as well. Now, whenever you're designing substantive analytical procedure, they are telling, one, you need to determine whether analytical procedure is suitable for a given assertion. For a given assertion, whether it's suitable. If I want to understand existence of inventory, I cannot do analytical. Existence of inventory, I have to do a physical verification. To understand basically whether it's suitable for a given assertion. Achha, now for analytical procedure, we use data to evaluate the reliability of the data, develop an expectation, determine the difference, what is coming. So according to me, it should be like this, it is like this, the difference is huge, investigate. Okay. Now, how much should I rely on analytical procedure? How much should I rely on analytical procedure? It depends. Okay, sir, it depends on what? So one, it depends on materiality of item. Item material, also do something else. Other audit procedures directed towards same objective, whether they are matching, not matching. Accuracy with which I can expect the result of analytical procedure. If I'm very happy with my analysis, I rely more. And fourth, how are the inherent and control risk? If inherent control risk are high, chance of fraud and error are high, doing only analytical will not help you. You should also do something else. How much I can rely on analytical procedure depend on certain item. Acha, analytical procedure also includes investigation of the identified fluctuations and inconsistencies in relationship. How do I do investigation? How do I do investigation? The one, we inquire with the management. Difference aaya to we'll inquire. And will also obtain appropriate audit evidence relating to their response. We will inquire with management, they will reply, वो reply जो कर रहे उसके related also I'll obtain sufficient appropriate evidence. ठीक है, तो inquire with the management and obtain appropriate audit evidence relevant to management responses, and you may do any other audit procedure which are appropriate in circumstances. Any other audit procedure which are appropriate in circumstances. Clear? Achha, sometimes management not giving you explanation, you may do something else. Achha, so how do I do investigation of identified inconsistencies or identified fluctuations? One, you inquire with management, obtain appropriate evidence related to their responses also, and to any other audit test whichever you deem appropriate. Fine. Question number 2. We're doing all important questions as well. Okay, analyzing account fluctuation by comparing current year to prior year. What are the reasonableness test? What are the ratios used in performing analytical procedure? And what are the source of information? You know, analytical procedure में some data is used. So that source of information which will give us data. Achha, one is a reasonableness test. Now see, sales 100 hai, GST should be 18. So that's a reasonableness test. But current ratio, NP ratio, GP ratio, they are all basically your ratios. So interest expense against the interest bearing obligation loan, this rate of interest 6%, so interest expense should be this much. Reasonableness test. Raw material consumption based on your production, wastage against the production, sales discount or commission against the sales. Sales itna hai, we give generally this much discount, or this much will be the commission, or this much will be the discount. Rental revenue based on occupancy. So these are reasonableness test. Okay, ratios, GP ratio, inventory turnover ratio, debtor turnover ratio, profitability ratio, liquidity ratio, current ratio. These are all ratios. And data which is basically used for analytical procedure. How do we get that data? Kahan se milega? One, interim financial information or GST returns, from budgets, from bank records, some board minutes, management accounts. So these are the sources from which the data will be available. Fine. Question number 5. Question number 5. Okay. In audit of DEF Limited, in the audit of DEF Limited, the auditor has made use of certain analytical procedure and there is some inconsistency coming up. What should be the course of action? Acha, whenever an inconsistency comes up, can I say we require to investigate? Acha, now how do we investigate? We inquire with the management, obtain appropriate audit evidence relating to management's response, and we do any other audit test which are appropriate in the circumstances. So explain investigating unusual items. This was SA 520. Moving on to SA 530. Okay, we'll do 2 more, 530, 540. We'll do 2 more, then we'll take a break. There will be 2 breaks because the session is from 7 to basically or 12:30, 5.5 hours. 2 breaks we'll be taking. 2 more, then we are taking break. Keep smiling, pay attention. Stop not till your goal is achieved. Okay, SA 530 is on audit sampling. We know auditor always has lack of time, and because of that we go for sampling. Now sampling is nothing but application of audit procedure to less than 100% of population. If you check 80%, that is also sampling. And whenever you go for sampling, there is a sampling risk. What is the sampling risk? That the opinion based on sample will be different if the whole population was subject to audit. So sampling risk arises from the possibility that auditor's conclusion based on sample may be different from the conclusion if the entire population were subject to the same audit procedure. Now, isme there are two types of risk. Two types of erroneous conclusion can come up. Okay, one, errors which you find in sample. Errors which you find in sample are less than the population percentage wise. Remember I had given you a kind of a chart jaisa. The percentage wise, population mein errors were 10%, but in a sample you found only 6%. So you will feel what? Population mein as such it's 10%. Out of 100, basically there are 10 errors. So, but in 40 you found out only 2. So 100 mein 10 tha, 10%, but in 40 I found 2. Can I say in sample we got 5%? In sample you found less errors. Acha, if you are checking control, the sample mein you found less errors. If you are checking control, you will feel controls are more effective than they actually are. And if you are doing substantive procedures, you will feel material misstatement does not exist when in fact it does. If you find lesser errors, you will feel controls are more effective. And if you are doing a test of detail, you will feel material misstatement does not exist. But suppose you found more errors in sample percentage wise. 100 mein there were 10. But in a sample of 40 mein you found 6. Or 40 mein 6, you found 15%. So you feel controls are not effective, but actually they are better. So controls are less effective than they actually are. And if you're doing basically test of detail, you will feel material misstatement exists. In fact, utna sara nahi tha problem. Because you found more errors in sample, that's why this is coming. So material misstatement exists when in fact it does not. Okay, so this is basically a sampling risk. One is you find lesser errors in sample. Second you find is more errors in sample. If you find lesser errors, you will feel controls are more effective than they actually are, or you feel material misstatement does not exist when in fact it does. Achha, if you find more errors in sample, you feel controls are less effective than they actually are, or you will feel that the material misstatement exists when in fact it does not exist. Fine. Okay, going to the word statistical sampling. Statistical sampling is basically approach to sampling which will have following characteristic. One, there's a use of random selection. The selection is done randomly and you'll use a probability or other mathematical or statistical method for evaluating the result. The statistical sampling is random selection, use of probability or other statistical methods for basically evaluating the sample result. Okay, anomaly, a misstatement or a deviation. Okay, when you are doing test of control not followed, usko deviation bolte hain. But whenever you're doing a substantive procedures and you identify problems, there's a misstatement. The misstatement is for substantive procedure, deviation is basically for compliance procedure. A misstatement or deviation which you found in a sample, but it's not a representative of misstatement or deviation in the entire population. Okay, it's there in sample, but such error is not there in the remaining population. Remaining mein aisa nahi hai, that's called anomaly. If management says that, sir, this misstatement or deviation which you found is anomaly, you need to perform procedures to understand whether it's really anomaly or not. ठीक है. Now requirement number 1 is important: sample design, sample size, sample selection. The design of sample. The design of sample should be based on the characteristic of population and the purpose of audit. It should be based on purpose of audit, characteristic of population. ठीक है. So I told you, if in Bangalore there are 20% senior citizens, in my sample also there has to be 20% senior citizens. This is design. Second, sample size. Sample size depends on how much sampling risk you are ready to take. There's an inverse relationship between sample size and sampling risk. If you want a lesser sampling risk, more the sample size should be there. And sample selection, you need to select in a manner everybody has a chance of selection. I'm not telling equal chance, but every unit should have a chance of selection. Okay, now sample is selected, you perform your audit procedures. After performing audit procedures, you'll be able to identify the misstatements and the deviation. Try to understand the nature and cause. Try to understand the nature and cause of misstatement, deviation, why this misstatement happened, why this deviation happened. Okay, now in a sample, these are the misstatement, deviation, this is the reason. So how many misstatements or how many fraud or error will be there in remaining population? So project the misstatements and then come to your conclusion. conclusion. The first sample design, sample size, sample selection. Select ho gaya, perform your procedures. Now you identify misstatements, deviation, try to understand the nature and cause of it. Okay, so in the sample, this many misstatements or deviations are found. These are the reasons. Now, what misstatement or deviation can be there in remaining, project it, and then come to your conclusion. So now evaluate the result of sample and whether sampling has provided a reasonable basis for conclusion. Okay, question number 1, a good one. They're talking about two methods of sampling. They're talking about one, stratification, value weighted selection. Okay, stratification, you divide the population into homogeneous unit. Okay, so I'll divide it based on monetary amount, transaction from 1 to 1 lakh, 1 lakh to 3 lakh, 3 lakh to 5 lakh, and above 5 lakh. Acha, now above 5 lakh I check all. 3 lakh to 5 lakh I'm checking 1 for every 2. 1 to 3 lakh I'm checking basically 1 for every 3, and below 1 lakh I'm checking 1 for every 10. That way I can do it. So audit efficiency is improved if auditor stratifies the population. You divide it into subpopulation which have a similar characteristic. Fine. The objective is to reduce the variability within each stratum. Now see, if I have all together, the 1 rupee transaction and 10 lakh transaction, everything gets equal weighted. No. So above 5 lakh I'm segregating, below 1 lakh, 1 to 3 lakh, 3 to 5 lakh, that's why I'm segregating, and then 1 to 3 lakh mein everything they are basically kind of considered similar. 3 to 5 lakh mein everything is considered similar, and wahan pe we can have 1 for every 2, wahan pe that way you can do it. Okay, while performing test of detail, the population is often stratified by the monetary value. Okay. And based on this, you can basically have a greater effort for the large value item. So above 5 lakh, I'm checking all. 3 to 5 lakh, I'm checking 1 for every 2. But below 1 lakh, I'm checking 1 for 10 transaction. So that way, you can focus on larger value thing. And the population may be stratified according to a particular characteristic. Generally, we do it based on a monetary value. The result of audit procedure applied to sample of item within a stratum can be projected for that stratum. So वो जो stratum था ना 1 lakh to 3 lakh, तो whatever result came for 1 lakh to 3 lakh, I check 1 in 3, तो उसमें फिर projection is only for that stratum. ठीक है? Then projected misstatement for each stratum are then combined. Projected misstatement for each stratum are then combined, and we consider the overall basically possible effect of misstatement on total class of transaction account balance. This was stratification. Value weighted selection. What is a value weighted selection? So under your value weighted selection, what is happening? Acha, so value weighted selection, what do we do? Imagine there are 1,000 sales invoices and total sales is 5 crore. Total sales 5 crore. And suppose 5 crore total sales hai, I need 100 invoices. So 5 crore divided by 100. So can I say it comes 50 lakh? I need 100 invoices. 5 crore, 5 lakh, sorry, not 50 lakh, 5 lakh. Okay, so what I'll do is I'll have all my sales invoice, individual amount and cumulative amount. Cumulative. Out of 1,000, I want 100. So I want to select 100. Total sales amount is 5 crore. 5 crore divided by 100. So I get an interval. The interval is 5 lakh. Wherever the cumulative sales exceeds the multiple of 5 lakh. I repeat, cumulative sales exceeds multiple of 5 lakh. So cumulative sales 5 lakh, 10 lakh, 15 lakh, 20 lakh, 25 lakh, 30 lakh. So cumulative sales exceeding multiple of 5 lakh, that item will get selected. So automatically item which has a more value, uska chances of selection will be more. Item which has a less value, the chance of selection will be less. So you need to have a cumulative figure of sales also. Wherever cumulative figure exceeds a multiple of 5 lakh, that is getting selected. ठीक है? So one of the benefit is over here again a large value item पे you can focus. So smaller sample size but without compromising the quality. Question number 2. Okay, if you check question number 2, there's a stratification done over here. Question number 2, there's a stratification done over here. Just a minute. Okay, what they've given over here, check out. So while conducting audit of PC Limited, CAT decided to use sampling technique to test the account trade receivable, and they've divided into following groups. Fine. And you pick up the different percentage for examining. You are required to explain the concept of stratification. We just now understood the concept of stratification and uska use. So that is fine. Stratification, uska use already covered above. Pen has stopped working. Okay, let me just finish this and the next standard. Afterwards, I just need to restart my laptop. Pen has stopped working. Okay, next important question. Okay, question number 6. In your question number 6, Chintamani Limited appointed Chintan and Mani as the auditor. Mani is of opinion 100% checking is not required and they can rely on audit sampling. But Chintan is concerned whether the audit sampling will give a reasonable basis. You're required to guide about if audit sampling has not provided a reasonable basis. If audit sampling has not provided a reasonable basis for conclusion, what do I do? Now remember, first I basically sample design, sample size, sample selection. Once the sample is selected, एक बार sample select हो गया, then what do? Then we check it, we identify misstatements or deviation, we project it, and then we come to a conclusion. ठीक है, if you conclude that the sampling has not provided a reasonable basis, if you conclude the sampling has not provided a reasonable basis, what you should do? If the auditor concludes that the sampling has not provided for a reasonable basis, the auditor may request management to investigate the misstatements identified and look for further misstatement. Achha, if you feel sampling has not given you appropriate, go in depth. Tailor the nature, timing, extent of further audit procedure. ये word है ना यहाँ पे, further audit procedure. So that you can do the further audit procedure basically because you have not got sufficient appropriate audit evidence. Let me just do one thing. I'll open up. This was essay 530, right? Okay. So what I should do in this case, request management to investigate the misstatements which have been identified. That you can do one. Second, you can tailor the nature, timing, extent of those further audit procedures which will be required to get the relevant assurance. Fine. Moving ahead, what do you mean by the word non-sampling risk? Achha, see, if you select a sample wrongly, आपका sample गलत select हुआ, that's sampling risk. But imagine, sample was properly selected. You checked it wrongly. That was your mistake. Some human error you did. You interpreted wrongly. So sample में कोई गलती नहीं है. Your interpretation is wrong. That's non-sampling risk. So what do you mean by the word non-sampling risk? It's an erroneous conclusion for any reason not related to sampling risk. It's erroneous conclusion for any reason not related to sampling risk. Examples. So human mistakes, misinterpreting the sampling result, applying audit procedures which are not appropriate for the objective. You applied a wrong audit procedure and relying on erroneous information. You got erroneous confirmation. Sample was not wrong. Respondent had given a wrong confirmation. We relied on it. तो उसमें sample की गलती नहीं है. Problem is not of sampling. Problem is of something else. These are non-sampling risk. Clear? Human mistake, misinterpreting the results, applying a wrong procedure, relying on erroneous information, this is non-sampling risk. Okay, last standard before break, going to SA 540. Last standard before break, going to SA 540. Okay, audit of accounting estimate. We know in financial statement, many places estimates are involved. And whenever estimates are involved, there's a possibility management may change the estimate in order to increase or decrease the profit. So management may use the authority of making or changing estimate as a tool for manipulating the books. And as a result, whenever this basically estimates are involved, there's a greater risk of material misstatement that is possible. Acha, you estimated one thing, actual came something else. Management did an estimate provision 10,000, actual loss came 50,000, does not necessarily mean that the estimate done by the management was wrong. It was based on that day's situation. Later, if situation changed and that's why the bad debt was more, it is possible. So it does not necessarily represent a misstatement if there's a difference between estimate and actual. Okay, the objective of auditor over here, you need to obtain sufficient appropriate audit evidence whether the accounting estimate including the fair value estimate are reasonable. The estimate kaise hai? Reasonable, and the related disclosures are adequate. Fine. Definition is given. I'll just directly go to the word called estimation uncertainty. What is the estimation uncertainty? Suspectability, chances. The chances of our accounting estimate and the related disclosure. Whenever we do estimate, uske related some disclosures are also there, to an inherent lack in precision of measurement. So suspectability, chances of accounting estimate, related disclosure to an inherent lack in precision of measurement, that is your estimation uncertainty. Simple words, chances that an estimate can go wrong. Higher the chances, higher the estimation uncertainty, it becomes a significant risk. Higher the estimation uncertainty, it becomes a significant risk. Okay, now requirement 1, risk assessment procedure. Now you'll say, sir, this word came many times. Risk assessment procedure is procedures to identify risky area. But here we try to identify risky area related to accounting estimate. Now, how do I identify risky area? By understanding entity, environment, internal control. The same thing they've written. You need to obtain understanding of entity, environment, internal control, but related to accounting estimate. You need to understand the requirement of law applicable financial reporting framework, how management identifies transaction events condition where estimate is required, and how management makes estimate. How they make estimate, the method used by them, the data used by them, the relevant controls what they have, do they use management expert, the assumptions what they use, is there any change in making estimates compared to the previous year. So this this is what you have to understand. To obtain understanding of requirement of laws and regulation, how management identifies transaction event condition which needs estimate, and how do they make estimate. Okay. Now you obtain understanding, you're able to identify the risky areas. Also try to see whether there's an area where there's a high estimation uncertainty, it will be a significant risk. Now you come out with your responses. Okay. So whether the management, so first you try to determine whether the management has appropriately applied the requirements of applicable financial reporting framework and the methods which are used by them are appropriate, consistently applied. Acha, so determine whether the management has appropriately applied the requirement of laws and regulation, and method what is used by them is appropriate and consistent. Plus I can do one or more of following. Acha, for estimate, can I say last year they would have done some estimate, uska actual would have came this year. So you can check that. Acha, this year estimate done, I can see the subsequent event. After year end till the books are approved, there will be actual available of that also sometimes. So event up to the date of auditor's report, you see how management made the estimate, you're testing it. See, wahan pe you understood in risk assessment procedure. Here you test how management made estimate, the method is appropriate, assumptions are reasonable or not. If they have any controls for making estimate, test the operating effectiveness of controls if they were control. And you may develop your point estimate or a range estimate. See, management will always have a point estimate. Auditor can have either a point estimate or a range estimate. Now, next point, fourth one is important. Okay, if it is a significant risk, okay, high estimation uncertainty, if it's a significant risk, how would you respond to it? High estimation uncertainty, significant risk, how you respond to it? The one, you need to see whether the management had considered the alternative and why did it reject same. So how management has considered the alternative and why did it reject it? Second, you need to see the significant assumptions used by the management are reasonable or not. And third, if there are significant assumptions, okay, they are telling that future may sales will grow, and for that sales to grow we'll be investing in new machine. So whether they really intend to carry out that course of action. Okay, so management's intent to carry out a specific course of action, its ability to do so. Okay, so this is what you need to do if it's an estimation uncertainty. Three things to be checked. What? One, whether management has considered the alternative assumptions outcome and why did it reject it? Okay, what are the significant assumptions, whatever they've used, they are reasonable or not? And third, if that reasonableness of significant assumption depends on certain specific course of action by management, whether specific course of action they are going to do or not, that you try to evaluate. Acha, if management has not adequately addressed the effect of estimation uncertainty, if management has not effectively addressed the effect of estimation uncertainty, you develop your point or range estimate. The auditor shall develop a range within which you can evaluate the reasonableness of accounting estimate. If management has not adequately dealt with estimation uncertainty, you develop your range estimate. Anything coming in that range will be reasonable. That way. Okay, so now you obtain understanding of what management is doing. You checked all that things. Now you are able to understand whether estimates are reasonable, disclosures are adequate. Estimates are reasonable, disclosures are adequate. You're also able to understand whether any possible management bias was there, whether management was biased in making estimate, and take a written representations from the management. Okay, coming to questions of SA 540. Okay, some accounting estimate involve relative high estimation uncertainty. Okay, some estimate involve high estimation uncertainty. Uske example, like estimates which are highly dependent on judgment, like litigation, etc. Okay, estimates which are not calculated using a recognized measurement technique. If it is not calculated using recognized measurement technique, there is a high estimation uncertainty, high chance the estimate may be wrong. Okay, similar estimate was done in previous period, but this year we found a substantial difference came. Okay, fair value is basically fair value estimate for which highly specialized entity developed model is used. You are using entity developed model using much of unobservable data. Okay, so these are areas or these are examples where there is a high estimation uncertainty. Okay, question number 3. Question number 3. Okay, the degree of estimation uncertainty associated with outcome may be influenced by many factors. Okay, how much estimation uncertainty is there depends on factor. 1, how much judgment is involved. The sensitivity, if there is a small change in variable, what will happen? Rate of interest change from 5 to 5.25, kitna change aayega? Sensitivity to changes in assumption. Existence of recognized measurement technique. If recognized measurement technique is there, there will be a lower estimation uncertainty. Length of forecast. More the length of forecast, more it becomes uncertain. Availability of reliable data. An extent to which you are using observable or unobservable input. If more of observable data used, then lesser estimation uncertainty. If more of unobservable data used, more estimation uncertainty. Okay, question number 5. Okay, what are the matters that auditor may consider in evaluating the reasonableness of assumptions by management? What matters I'll consider in evaluating reasonableness of assumption? So one, I need to see whether they appear reasonable. They are interdependent, internally consistent. One assumption doesn't violate other thing. Internally consistent. They appear reasonable collectively with other assumptions also. And if it's a fair value assumption, they reflect the marketplace. Remember, fair value is based on market participant. Okay, plus I need to see assumptions are consistent with the general economic environment, plans of entity. They are consistent with the assumptions made in prior period. They are consistent with my experience. So experience about the entity, whatever I'm having, uske saath basically it's matching. Experience of the entity and other assumptions used by management. How do I decide whether they are reasonable or not? They should be internally consistent. They should appear reasonable collectively with other assumption also. And if it's a fair value wala thing, it's basically reflecting the market participant wala thing. Plus, it should be consistent with general economic environment, the plans, the assumption made in prior period, experience related to the entity, and other assumptions used by management. Okay, coming to question number 9. Okay, you want representation from management regarding the estimates. Okay, you want representation from management regarding the estimates, what is done. So related to estimate, what all representation you can take. Related to estimate, what all representation you can take. One. About appropriateness of the measurement process used. I can take a representation, the measurement process used by them is appropriate, the assumptions etc. used are reasonable. The assumptions properly reflect the entity's intent. So what we are intending, uske hisab se the assumptions are taken. The disclosures are complete and no subsequent events are there which requires adjustment to accounting estimate. So about representations related to accounting estimate, 1. Appropriateness of the measurement process, the assumptions etc. used. 2nd, assumption reflect the intent and the ability to carry out a specific course of action. Disclosures are adequate, proper, done, complete. And last one, no subsequent events are there which are affecting this estimates. Fine. Question number 9, it's okay. Okay, now the question number 9, it's not written important, but I'm still taking. Last year there were certain estimates done. And now you are appointed as auditor this year. Okay, you are appointed auditor this year. I want to check the estimates done in last year. Can I check? You were not the auditor last year. Can I check estimates done in last year? Answer is yes. Because this year that estimates may need a revision. Second, actual would have came this year. So sometimes actual would have came this year, last year ye tha, actual this. I can understand wo matching ho raha hai, nahi ho raha. So based on that I can decide this year's estimate will be proper or not, or management bias is there or not. So the outcome of accounting estimate will often differ from the one recognized in prior period. ठीक है. The auditor may obtain, if all you are doing by performing a risk assessment procedure to identify and understand the reason for difference, the auditor may obtain information regarding effectiveness of prior estimation. So I can understand how effectively prior estimation was done. You can get information about whether it needs a re-estimation this year or not. And you can also understand the estimation uncertainty, how much it is there. The review of prior period estimate also assists the auditor in the current period. The review of prior period estimate assists you in current period as well to identify circumstances or condition that increase the susceptibility of accounting estimate, and whether a possible management bias was there or not, you're able to understand that. So can I check the estimates of last year? Answer is yes. Management is telling no, management is not correct. Then question number 23. Question 23. Now, can you list down some circumstances, change of which will result in inquiry from management? Okay, so over here they are telling us they have done various accounting estimates, TK, and confirm to auditor that all estimates are recognized, measured, disclosed properly. The auditor observed that some change circumstances are there because of which estimate needs a change. Okay, change circumstances are there giving rise to a need for an accounting estimate. So which are the circumstances which happen because of which estimate may be required or changed? So uske liye you'll inquire with the management. List down some circumstances, change of which will result in inquiries from the management. Okay, the new type of transaction you have engaged, which may give rise to accounting estimate, I'll inquire with the management. Terms of transaction mein kuch change hua, I may need to inquire with the management. Some accounting policy have changed because, say for example, AS to Ind AS came. Okay, regulatory or other change happened, or new condition or event has occurred, and this is all leading to estimate required or revision in estimate. So I need to inquire with the management. This is the question. Okay, 12th one is basically about how to address the estimation uncertainty. Remember 3 points were there. And now, if management does not address the effect of estimation uncertainty properly, auditor should develop a range. If they have not addressed estimation uncertainty properly, you develop a range within which all things will be considered reasonable. Okay, this is SA 540. Any doubts? Anybody till now? Any doubts? Anybody till now? We take a break of 20 minutes. I repeat, we are taking a break of 20 minutes and then we are moving ahead. So it's 9 o'clock. We meet back at 9:20. I repeat, it's 9 o'clock. We are meeting back at 9:20. Enjoy your break. Any doubts are there? Do let me know. And please keep on replying. I need two-way communication. One-way communication is not going to help. Okay, hi, welcome back. We finished till SA 540 and now we need to start with SA 550. Related parties. Keep smiling, pay attention, keep replying. Are you loving it? Happy morning, Sahana. Okay, let's move on to SA 550, which is related party. We need to finish all the standards today. SA, standards on auditing today. SRE, SAE, SRS will do in the second half, that's evening session. Okay, now related party, we know that there are many times related party transaction. As such, related party transaction do not have more risk, but if at all, basically they are not at arm's length price, then they carry a more risk. So many related party transactions are in normal course, they do not have a higher risk. However, in some circumstances, there's a higher risk when when they are operated through a complex range of relationship and structure. Second, they are not done at a normal market terms. And third, your system is inefficient. The information system is not efficient in identifying the related party relationship and transaction. In that case, there will be a higher risk in a related party transaction. Okay, this essay says that irrespective whether risk is there or not, or whether law requires or not, so irrespective of whether applicable financial reporting framework establishes a requirement or not, we need to obtain understanding of related party relationship and transaction so that we are able to identify the fraud risk factor in related party transaction, and we are able to conclude that the financial statements are not misleading and they show a true and fair view. Okay. Now, if applicable financial reporting framework establishes a related party requirement, if at all the applicable financial reporting framework says something about related party, you need to see whether they have been appropriately identified, appropriately accounted, appropriately disclosed. So we need to obtain sufficient appropriate audit evidence whether they are appropriately identified, accounted, disclosed. So whether applicable financial reporting framework requires or not, I need to obtain understanding of related party relationship and related party transaction. But wherever law requires, I need to see whether they are appropriately identified, appropriately accounted, appropriately disclosed. Definition is fine. Who is responsible? Who is responsible for identifying the related party, accounting the related party transactions properly, disclosing them in notes to accounts? Management. They're telling auditor should have a level of knowledge. You should have a level of knowledge about client's business so that you are able to identify the related parties. Now coming to the requirement. Okay, first, risk assessment procedure. Now again, SA 540 also the word risk assessment procedure came, here also came. Now here the risk assessment procedure is you try to identify risky area related to related party. And how do I identify risky area? By understanding entity, environment, internal control. So what does management do about related party? You try to obtain understanding. You need to obtain understanding of entities, related party relationship and transaction. To inquire with the management. Inquire with the management regarding the list of related party, any change from last year, the nature of relationship with them, and whether you have entered into any transaction with them and which type of transaction. Inquire. Second, if at all there are any controls, if at all management is having any control relating to identifying related party, accounting for related party transaction, approval of related party transaction, obtain understanding of control that management is established. Obtain understanding of control that management is established to identify related party, account for that transaction, disclosure of related party transaction, approval, authorize and approve significant transaction arrangement with the related party, and approval of significant related party transaction outside the normal course. Okay, the one, you try to understand what management does. Okay, second, you remain alert. Okay, the one, you try to understand what management does. Second, you remain alert for related party information. Okay, so you remain alert whenever you're inspecting records. Wahan pe you are able to identify some related parties which were previously unidentified. That is also possible. And third, you share information with your team members. So this is what you do to identify the risky areas related to related party. Okay, now you are able to identify the risky area. Try to see whether it will affect one item, whether it will affect many items. That. Now coming to your responses. Responses is important. So point number 1 was important. Now point number 3 important. Okay, if you identify a related party relationship or a related party transaction which was previously unidentified or undisclosed by management. I identify a related party which was previously unidentified by management, or I identify some related party transactions which were undisclosed by management. What do I do? So first of all, you found something, promptly communicate to all your team member. Okay. Request management to identify all transaction with that party. So I identified a related party which was unidentified by management, so there might be something wrong. So tell management to give all transaction with that party and ask management why they were not able to identify it. Inquire as to why the entity's control failed to identify that related party. Okay, now on the transaction with that party, perform substantive procedures. Check all the transaction in detail. Reconsider the audit risk. One place management has forgotten something. Can I say other place also they might have forgotten something? And do your audit procedures accordingly if you reconsider the risk. And lastly, if non-disclosure appears to be intentional, consider the implication on your audit report. If non-disclosure appears to be intentional, afterwards you understood janbooch ke, knowingly management had not disclosed it, you consider the implication on your audit, including your auditor's report as well as. Okay, this is one. Number 2, now this is also important. If you identify significant related party transactions which are outside the normal course. Okay, so first of all, you inspect the contract or arrangement. You inspect the contract or agreement to understand the business rationale, whether it suggests a fraudulent financial reporting. So never we paid commission to anyone. This time now we are paying commission to director's son. So try to understand business rationale. Does it suggest a fraudulent financial reporting? Okay, second, see the terms of transaction are consistent with management's explanation. The terms, whatever are there, they are consistent with management explanation and they've been appropriately accounted and disclosed. Plus one more thing, it's outside the normal course, so they have been appropriately authorized and approved. So one, try to see the contract agreement to understand business rationale. Does it suggest a fraudulent financial reporting? Whether the terms are consistent with the management explanation and whether they are accounted, disclosed properly as per the terms. Achha, number 2, you obtain evidence they have been appropriately authorized and approved. Fine. Now, after doing all these things, you're able to evaluate whether the related parties are appropriately identified, appropriately accounted, appropriately disclosed. Okay. Any issue related to related party, it's always a big thing. You have to communicate with TCWG, take a representation from management. What representation I'll take? They've disclosed to auditor all the related parties which they were knowing, unke relationship and transaction. So they've disclosed everything to us and they've appropriately accounted the related party transaction, disclosed them in notes to accounts. Okay. Now, coming to the questions. Okay, question number 2, May 22 exam. Question number 2, May 22 exam. I'll directly go to the important line. Discussion amongst team member. What discussion? What are the matter that can be discussed among team member for understanding the related party relationship and transaction? The discussion amongst team member related to what? The related party relationship and transaction. So what all discussions can take place? The nature and extent of entities relationship, transaction with related parties, emphasis on maintaining professional skepticism, circumstances which indicate existence of related party, document or record that indicate the existence of related party. ये circumstances condition था, ये records and documents था. Okay. Importance that management TCWG attach for identification, appropriate accounting, disclosure of related party relationships and transaction, and how special purpose entity controlled by management might be used to facilitate the earnings management. So how special purpose entities created by management will be used to facilitate earnings management. So how basically they might be doing misappropriation of asset by entering into transaction with related party, this all matters of discussion can take place. Okay, next question, question number 3. In meeting SA 315 requirement to obtain understanding of control environment, the auditor may consider features of control environment relevant to mitigating the risk of material misstatement associated with related party. Acha. So some features of control environment. Good environment will ensure that the risk of material misstatement in related party goes away. Give examples of that. So there's a internal ethical codes being developed. There are policies, procedure for open and timely disclosure of interest. If you have some interest in firm, like say one of the director is a partner in one of partnership firm. One of your director is a partner in partnership firm. He can disclose his interest that, sir, I'm a partner in this firm. Assignment of responsibilities for identifying, recording, summarizing, disclosing account related party transaction. Timely disclosure discussion between management TCWG of significant related party transaction which are outside the normal course. Clear guidelines for approval of related party transaction. Periodic review by internal auditors. Periodic actions by management to resolve the related party issues. Whistleblower mechanism. So these are all. These things you have it in control environment. These things will basically be a part of control environment. This will ensure that the risk of material misstatement in your related party wala thing goes down. Good ethical codes, open policies, procedures for disclosure of your interest, management TCWG meeting for basically handling the significant related party transaction outside normal course, clear guidelines how to approve the related party transactions. So these are all strength under internal controls that will ensure that the risk of material misstatement in related party transaction goes down. I hope this is clear. Okay, question number 4. How can you verify existence of related party? Various sources. That's okay. That's fine. Not much important. Okay, question number 5. Question number 5. See, management is responsible. If management says that the transaction with related party are at arm's length price, management has to prove it. If management says transactions are at arm's length price, they need to prove it. So how management can prove it and how auditor will evaluate the same? Two things. So how management may prove transactions are at arm's length price by comparing the terms of related party transaction to a identical or similar transaction with non-related party. I sold goods to related party at 100, to others also same day I sold at 100. Okay, engaging an external expert. External expert is hired and he will tell how the rates are fine. And comparing the terms to a known market terms. Market may similar type of transactions, what rate they are executed. So this is how management will prove its arm's length. Now how auditor will evaluate? The auditor has to consider the appropriateness of management's process. He has to verify the source of internal or external data used, and he has to evaluate the reasonableness of any assumptions which has been taken by the management. So this is how auditor will be evaluating whether they are really at arm's length price or not. Okay, moving ahead. Fine. This was SA 550. Moving on to SA 560, which is subsequent event. Okay, now SA 560 is subsequent event occurring after the balance sheet date. We have accounting standard 4, we have Ind AS 10. They can be of two types, adjusting, non-adjusting. Adjusting events are those which provide additional evidence as to the conditions which existed at balance sheet date. Adjusting events are to be adjusted. Financials are not yet approved, so we can change the financials. Non-adjusting event are those events which do not provide additional evidence as to the conditions which were prevalent on balance sheet date. They are kind of a new situation which have came up. They are not to be adjusted in financials, but if material, they are to be disclosed in your notes to accounts. If material, they need disclosure where? In notes to accounts. And one more thing, if a non-adjusting event affects your going concern, it becomes your adjusting event. We had seen this under your Ind AS 1. Ind AS 1 we had seen this. Okay. Now, what are the objectives over here? You need to obtain sufficient appropriate audit evidence about the event occurring after the balance sheet date till the date of audit report. Acha. Over here, the subsequent event is till the date of auditor's report. In your accounts, it is till the date it's approved by board of director, but here it is till the date of audit report. So after year end, till the date of audit report, any subsequent event has happened which requires an adjustment in financials or a disclosure in financials, so whether they have been done or not, they are appropriately reflected in financial, and any fact becoming known to auditor after the date of audit report. So one thing is from balance sheet date till the date of audit report, adjusting, non-adjusting event, they are appropriately adjusted or reflected in financials. And then any fact coming to your notice after the date of audit report, had it been known earlier, you would have given a different opinion. How do you respond to that? Okay. Coming to the first one, this is important. Event occurring between the date of financial statement and the date of audit report. So you should perform procedures to obtain sufficient appropriate audit evidence that all the events up to the date of audit report that require adjustment or disclosure in financial statement have been identified. For that purpose, the procedures to identify such thing, for that purpose, what do we do? How do we identify adjusting, non-adjusting event? 1. Obtain understanding of the process followed by the management. Inquire with the management whether any subsequent event has really occurred. So read the minutes of the meeting. If something big happened, the BOD would have met the minutes of the meeting. Review the latest interim financial statements, or read the latest available budgets, cash flow. Something big happened, the budgets, cash flow would have been revised. Okay. Inquire with the entity's legal counsel. You can contact lawyer asking, is there any change in the status of case which were already going on? And take a representation that they have communicated all the subsequent event to you. They're not hiding anything from you. Okay, so how do I identify subsequent event? Understand what management does. Inquire with the management whether they have really happened. Read the minutes of meeting. Read the latest interim financial statement. Read the latest budgets, cash flows available. Do inquiries with the entity's lawyer, etc. And lastly, take representation. Okay. Now, fact becoming known to auditor after the date of audit report. Fact becoming known to auditor after the date of audit report. If it was known earlier, you would have given a different opinion. Now what to do? Now see, there are two things. One, the fact has become known to you before financial statements are issued or after financial statements are issued. It's after audit report. It's after the date of audit report, but it is before the date financials are issued, or it is after the financials are issued. If financials are not yet issued, okay, we identified something. So first of all, what do you do? Discuss the matter with management or TCWG. See whether the financial statement needs revision and how management want to deal with the matter. If management is ready to amend the financial needs amendment, management is ready to amend, you check the amended financial, give a new report directly on amended. Give a new report already on amended. Old report was not circulated. If you had given to management, take it back, put it in dustbin. So directly carry out the procedure on amendment, provide a new report. But if management is not ready to amend, financial needs amendment, management is not amending, what to do? Financial needs amendment, management is not amending. So what do you do? If report was made, not yet given, financial needs amendment, financials are wrong, to modify the report. Report was already given, tell them not to circulate, tell them I'll give a new report. If they still circulate the old report, take appropriate action to prevent reliance on your report. Now, what appropriate action? You can attend AGM, tell it at AGM that this report given to you is not reliable. I told management not to circulate it. Okay. What if this is known after the financial statements are issued? Financials are already circulated. So now what to do? Okay, first of all, you discuss the matter with management, TCWG, see whether financial needs amendment, how they want to deal with the situation. Okay, if they're ready to amend financial needs amendment, they're ready to amend. To check, carry out the procedures which are appropriate in circumstances. Okay. You give a new audit report based on amended financial, and one more thing. Old audit report, financials were already given. So those who already got, how they were informed about this situation. So you need to review the steps taken by the management to ensure anybody who has got the previously issued financial statement together with audit report, they are informed about situation. This is extra as it's already circulated. I need to understand the steps taken by the management, how they've informed about the situation to those who already received audit report, financial statement. Achha, if management is not ready to amend the financial statement, so now the report which you have given is wrong, to take appropriate action to prevent reliance on your report. AGM pending, go and attend AGM already over, publish it in newspaper. Fine, moving ahead. Question number 4. Okay, see question. Now question mein there are some going concern issue is there, but question is not that. Question is not that. Read last 2 lines very, very carefully. Again and again I'm telling you, last 2-3 lines you need to read it very carefully. As an auditor, what audit procedures you perform to ensure all subsequent events are considered? Acha, to it is basically requirement ka first point. What procedures you perform to identify that all subsequent events have been considered? The answer is this. Answer is this. Clear? Okay, moving ahead. Okay, question number 5. Inquiry from management. Whenever I inquire with the management, it's helpful for auditor to evaluate subsequent event. Inquiry with the management is helpful for auditor to evaluate subsequent event. Which specific inquiries I can make for subsequent event? What specific inquiries I can make for subsequent event? 1. Whether new commitment, borrowings, etc. have been entered after year end, before the date of audit report. Whether any sales, acquisition of asset has occurred. Asset ka. Achha, increase in capital, new debt debentures issued, anything bought back, kind of that has happened. Any asset appropriated by government took away or destroyed by fire or something after year end till the date of audit report. ठीक है. Any development regarding contingencies, any unusual accounting adjustment done after year end till the books are approved, or basically till the date of audit report. Any event has occurred which affects going concern. ठीक है. Any event that has occurred that is relevant to recoverability of asset. Any event has occurred which affects the provisions which are made in financial statement. So these are specific inquiries relevant to subsequent event. Done. This is your SA 560 going to SA 570. This was 560 going to 570 going concern. Okay. Now see, we know going concern is one of the fundamental accounting assumptions. And whenever management is preparing financial statement, they always assume they're a going concern. But we need to see whether entity is really a going concern. Because if entity is not a going concern, the accounts are to be prepared on totally different basis, which we call it as liquidation basis. Okay. And who is responsible? Who is responsible for making an assessment whether the entity is going concern? Sir, management. The management has to make an assessment whether they are going concern or not, and based on that, they should prepare financial statement as per going concern. Okay. The management is responsible for making assessment as to the entity's ability to continue as going concern. And for making that assessment, the management has to make judgment. For making that assessment, the management has to make judgment about what? The uncertain future events, the future outcomes of events or condition which will be there. Uske related, they make judgments and they say whether they are a going concern or not. Okay, the degree of uncertainty associated with outcome. Uncertainty more associated with outcome, so uske andar basically it increases the degree of uncertainty associated with outcome of event or condition increases significantly the further into future the event or condition will occur. If event or condition will occur after 10-20 years, jitna dur hoga utna to predict will be difficult. ठीक है. The size and complexity of entity, nature and condition of business, they will also affect the judgment. And the judgment about future is based on information available at the time when management is making estimate. Later on situations may change, and that's why basically things may change, but management makes assessment of going concern based on data prevalent today. ठीक है. Objective, we are required to obtain sufficient appropriate audit evidence about appropriateness of management's use of going concern assumption. The management uses a going concern assumption, whether it's appropriate or not. Second, to conclude whether any material uncertainty exists which cast a doubt on entity's ability to continue as going concern. Any material uncertainty is there or not, like litigations. And third, how do we report? How do we report? The one, we need to see whether going concern assumption adopted by management is appropriate. Second, we need to conclude is there any material uncertainty, and how do we report? Okay, first, risk assessment procedures to identify risky area but are related to going concern. Okay, so over here, we need to basically try to see whether any event or condition exists that cast a doubt on entity's ability to continue as going concern. For this, what do I do? If management has already performed an assessment of going concern, what you should do, you should discuss the assessment with the management. And determine whether any events have been identified which cast a doubt on entity's ability to continue as going concern. That's a second. If management has not yet performed assessment, regarding whether they are going concern or not, to ask management why do they believe they are going concern. Then you need to discuss with the management the basis for intended use of going concern basis of accounting. Then why do they say that they are a going concern, and are there any event condition which cast a doubt on entity's ability to continue as going concern? The simple words, if management has already done the assessment, discuss the assessment with management. If they have not done the assessment, ask why are they going concern without doing assessment, why they are basically telling they are going concern. Okay. Plus, you look for the indicators. You're trying to identify risky area where there may be a going concern problem. Look for the indicator. The one I tried to understand what management does. And now, the assessment kisne kiya? The management. We are trying to understand what management does. And now we are looking for indicators. We are remaining skeptic. Okay, indicators are divided in three parts: financial indicator, operational indicator, other indicator. Under financial indicator, problem is of money. Money problem. Like, net liability more than your asset. The loans are approaching maturity, but you don't have money to repay. And creditors have stopped giving goods on credit. Negative operating cash flow. Adverse financial ratio. You have stopped giving dividend. Substantial losses are there. So these are basically all your financial problem. Achha, operating indicator problem is not of money. But our raw material which you are using is not available. Labor problems are there. So that are called operating indicators. Loss of KMP, loss of major market, labor difficulty, shortage of basically the raw material, new competitor came up. These are all operating indicators. Achha, other indicator relate to regulatory environment and the litigations. It relates to basically the regulatory requirement, and it also relates to litigations, legal proceedings. Okay, so some regulatory requirements are changed, because of that the trouble is coming up, or some litigations going on, that comes under your other indicator. If you find an indicator, there may be a going concern issue. An effect of a negative indicator may be mitigated by another positive indicator. Like we are not able to find the raw material, we found a substitute raw material. That way. Okay. So one, you basically understand what management does. So management ka assessment. And number two, you remain alert. Look for the indicators. Okay. Now, whenever you're evaluating management's assessment, you need to cover the same period, and that has to be minimum 12 months. So whatever management has covered, you cover the same period because you're assessing management's assessment. Acha, if they cover 12 months, or suppose they cover 2 years, but I want to look further. If you want to go for a period beyond management assessment, you need to inquire with the management about event or condition beyond the period of management assessment. Okay, sir, I understood what will happen next 2 years, but what after 2 years? Discuss with the appropriate level of management if you want to do beyond management assessment. Okay. Now, additional audit procedures when event or condition are identified. Additional audit procedure to be done whenever events, condition are identified. The one you are trying to look for the indicator, now you found something. Acha, indicator mila. Ab kya karenge? So if management has not yet performed an assessment for that thing, tell them to make a detailed assessment. If they already made a plan, if management already has made an assessment, they have a plan how to overcome that thing, So basically try to understand the feasibility of management's plan, whether the management plan are feasible or not. Okay, try to see if entity has prepared a cash flow forecast. If they prepared a cash flow forecast, so try to see whether the data used is reliable and there's a support for the assumption. So whether the data used is reliable and the assumptions which are taken are basically kind of proper. Acha. Also try to see any additional fact which have become available since the date management made assessment. Management made assessment like say 1 month back. From that date till today, anything new came up that you try to see, and you request the written representation. We request the written representation regarding the future plan of action, feasibility of plan. Okay, the plans, whatever management is telling, that is feasible and they are really going to implement it. So this is when events or condition are identified. Clear? Now coming to your reporting. Okay, if going concern assumption is inappropriate, you are not a going concern, still accounts are prepared on going concern, full accounts wrong. Full accounts wrong because they should be on liquidation basis, you prepared on going concern basis, directly adverse report, everything wrong. Going concern assumption not appropriate. As such you are a going concern, but there's a material uncertainty, litigation going on, if we lose the case we may shut down. So now what to do? As such you are a going concern, but there's a material uncertainty. So you need to determine whether that material uncertainty has been appropriately disclosed in the financial statement or whether it's not appropriately disclosed in financials. If adequate disclosure of material uncertainty is made in financial, adequate disclosure of material uncertainty is there in financial, the financials are showing a true and fair view. There are some material uncertainty we have disclosed. So you are required to give an unmodified opinion, but you'll have an extra para. You'll have extra para, material uncertainty related to going concern, drawing attention of users to that material uncertainty. It's already disclosed in financial, right? So the para will draw attention. So you will have a clean report, unmodified report with the extra para named as material uncertainty related to going concern, drawing attention. We draw your attention to note 10 of financial statement, which reflects the litigation going on with regards to the environmental damage done by the entity. And our report is not modified with respect to this matter. We are not modifying, we are just drawing your attention. This is if adequate disclosure about material uncertainty made in financials, we give an unmodified report with extra para drawing attention. But if adequate disclosure is not made in financial, then in that case you're required to modify your opinion, either give a qualified report or adverse report depending on how the disclosure has been done. Okay disclosure done, you may give a qualified report. Not at all proper disclosure done, you will give an adverse opinion. Okay. Now moving ahead. See, if there's a significant delay in approval of financial statement, that may also indicate some going concern issue. Financial statements are getting delayed. Why? So that also might be indicating some going concern issue may be there, to look for that as well. Okay, question number 2. What are the additional procedures that are relevant when events or condition are identified? This is based on requirement number 4. But the answer, this one is as per application and explanatory material. The requirement number 4 answer you right, you are not wrong. That is as per bare text, this is as per application explanatory materials. Or what to do for exam? Do what ICAI does. They have written this, I'll prefer this. So analyze and discuss the cash flow, profit forecast which are available. Okay. Analyze and discuss the latest interim financial statements. Read the terms of loan agreements. Read the minutes of meeting of shareholder TCWG. Inspecting or inquiring with the legal counsel. If entity has a plan, how they are going to basically fulfill the plan, evaluate the plan, and try to also see subsequent event which happened after year end till the date of audit report. If it indicates you are not a going concern, then accounts for this year cannot be as per going concern. Okay, confirming the existence, terms, adequacy of borrowing facility. Okay, reports of regulatory action against you, like against Paytm. Paytm pay, so many restrictions have been put by RBI. So now we cannot basically use Paytm for so many purposes. And these are all points basically if at all events or condition are identified. So can I write answer as per bare text? You can write it, nothing wrong. If you mix it up both, then also it's okay, don't worry about it. Okay, moving ahead. Question number 6. Okay, now Abhinandan Limited Chemical Manufacturing, they've received a so-cause notice and they're dumping toxic waste without treating it. कहाँ पे डाल रहे हैं? They are violating environmental laws. Okay, penalty 500 crore rupee. 500 crore. अच्छा, उनका profit is only 35 crore, turnover 100 crore, 500 crore penalty, you will become insolvent only. 35 crore you are earning every year and someone puts a penalty of 500 crore. So 13-14 years of your profit. ठीक है. You received a show cause notice and the company's legal department basically feels that the decision will be in their favor. Achha, so you have written a note. The company has received in your financial statement, there's a material uncertainty related to going concern. You have written a note. Company has received the financial statement may by way of a note. The company has received a show cause notice from National Green Tribunal for violation of environmental laws and legal department feels that it will be in their favor. Okay, did you write anything about going concern? If we lose the case, will not remain going concern. The adequate disclosure is not done. Adequate disclosure not done. It's not a proper disclosure. You will give an adverse opinion. Okay, the check over here. Answer given to you. As no appropriate disclosure has been done, you will basically issue an adverse opinion. Will issue adverse opinion. Acha, plus under your 143 subsection 3 clause J. Acha, 143 subsection 3 clause J, usme impact of pending litigation. Whether the financial statement adequately reflect the impact of pending litigation, there also I need to report. Okay, question number 7. RTP May 23. Okay, if you check out, this is aging schedule of your iska hai, trade payable. Okay, MSME are nil, others are total 10. Out of total 10, less than 1 year say overdue is 2, means 80% of your trade payable, 80% of your trade payable are overdue by more than 1 year. 80% of your creditors are overdue by more than 1 year. It signifies you have a going concern issue. Achha, equity ratio, turnover ratio, net profit ratio all slipped drastically. On reviewing bank statement, the cash credit mein there is no debit transaction in the month. ठीक है, you have not repaid anything. The company has a negative drawing power. The bank has refused to give further cash credit to you. And it was identified management did not have any future contracts to boost it. No information there in notes. So there is a material uncertainty related to going concern. No information, no disclosure in notes. You will give an adverse opinion. So check out, you should give an adverse opinion. Actually, they've written qualified or adverse. Better will be adverse directly over here. Okay, question number 8. You were basically having a circus company, but people are now going to malls, multiplex, theaters. The circuses have gone down. And because of that, what has happened is, there's a delay in payment of salary wages. Bank has also decided not to give you extra funds. You discuss with the management, there are no appropriate plans to mitigate the circumstances. What should be the course of action? So I can understand that you are no longer a kind of going concern. I can't say just a material uncertainty, but यहाँ पे you have no plans to mitigate the circumstances and they've clearly written use of going concern inappropriate. If the use of going concern is inappropriate, still financials mein you have not reflected anything, whole financials wrong. Question clearly says it's not just a material uncertainty, the use of going concern inappropriate, directly give adverse report. Okay, this was your SA 570. Moving on to SA 580. This was SA 570. Moving on to SA 580, representations by management. Okay, now representations by management are nothing but the written statement. They are written statement by management to the auditor to confirm certain matters or to support other audit evidence. Now see, representations by management, they are audit evidence, but they are not sufficient appropriate audit evidence in themselves. So they are basically to support other audit evidence or to confirm certain matter. So when there are no other evidences available, I can take this. And the fact that you got a reliable representation does not relieve you from doing other audit procedures. The other audit procedures will remain same. Fine. Now, this standard tells you first you need to decide from whom do you need a written representation. When I say management, management में whom? Piyun chalega? नहीं. So from whom? The one who has basically the responsibility and knowledge for the matter. Second, what all representation do you need? The one, I need representation that management believes they fulfill their responsibility for preparation, presentation of financial statement. And number two, they have completely provided all information to us. So this is general. The management believes they have fulfilled their responsibility for preparation, presentation of financial statement as per the applicable financial reporting framework, and they have completely provided all information to us, not hiding anything from us. Okay, plus I should take representation wherever essay requires. Many essays told you take representation. And wherever you want a supporting audit evidence, there also you can take representation. The one was basically from whom do we need, now which all representation. ठीक है. Next is date and period covered by representation. अच्छा, date of representation letter should be not 31st March. Not 31st March. It is as near as but not later than the date of audit report. जो audit report है ना उसके nearer but not later than the date of audit report. Reason, we want a representation that management believes they've fulfilled their responsibility for preparation, presentation of financial statement as per applicable financial reporting framework. That they can do once financials are over. And financials are never over on 31st March. So take it as near as practicable to, but not later than the date of audit report. And the period of representation, it should cover all the periods on which we are reporting. Are we reporting only on current year figure or are we reporting on both figures? If we are reporting on both figures, representation has to be for both figures. The form of representation, it will be in form of a letter addressed to the auditor. And if, this point, last one important, if I have a doubt over reliability of representation I asked, they gave me, but I have a doubt, or they don't give me only, what to do? So there are two questions. One, doubt over reliability or representation not provided. Acha, the first, coming to the doubt. If I have a doubt over the reliability of representation, what to do? So first of all, if you have a doubt over integrity of management, consider its impact on the reliability of representation. If you have a doubt over competence, integrity of management, determine the impact which it will have on reliability of representation. Acha, if representations which you have got are inconsistent with other evidences. Okay, representation says something, other evidences say something. They are inconsistent. Okay, do further procedure to resolve the difference. If you are not able to resolve, if matter is still unresolved, you consider the integrity, competence of basically management, and based on that you determine the impact which will have on reliability of representation. The simple words, if representation, other evidences are inconsistent, do some further procedure to resolve the matter. If you're still not able to resolve it, now you consider the integrity, competence of the management, and based on that you decide how much you want to rely on written representation. If you conclude representations are not reliable, take appropriate action, including possible effect on your opinion as well. The management gave me a wrong representation. One place they've given me wrong, other places also they might have given me wrong. So now, whether you want to basically do extra procedures or whether you want to give a modified report, take appropriate action. Okay, next one, if management does not give the representation you asked. Okay, you asked for representation, they are not giving, now what to do? If they're not giving, what to do? One, discuss the matter with the management. Re-evaluate the integrity of management. Now see, they're not giving me, means they're trying to hide something. So re-evaluate integrity of management and take appropriate action, including possible effect on the opinion of auditors in the auditor's report. So if they're not providing, discuss with the management, re-evaluate integrity and take appropriate actions. Fine, come to question number 2. Okay, check over here. You wanted a representation. In spite many reminder, it was not given. You told that, sir, do one thing. I'll write it, you just sign and give it to me. Still management remains silent. Means they are not giving the representation which you want, what to do. Just now we saw this 3 point. Discuss with management, reevaluate integrity and take appropriate action, including the possible effect on your opinion. Okay, these are the 3 points. Okay, plus if you feel there might be a fraud over here, section 143.12 also comes into picture. Caro clause number 11 is also on fraud. Fraud related आया 143.12, Caro clause 11. Okay, next question number 4. What is the date and period of written representation? Date and period of written representation. Date as near as practicable but not later than the date of audit report, and the period will be the period covered under audit. If you are covering both current year, previous year, the report will be on both. The representation will be on both. Clear? This is SA 580. We are done with 400 series, 500 series, going to 600. Still 600, 700, 800. 3 series are pending. Going to 600. Next break is at 11 o'clock. Okay, SA 600, using the work of another auditor. Another auditor over here means a branch auditor or a subsidiaries auditor. Branch auditor or a subsidiaries auditor. So you are being appointed as a principal auditor. This essay talks about roles and responsibility of principal auditor. If they want to appoint you as a principal auditor, should you accept the appointment? So before accepting as a principal auditor, I need to ensure that I'll be sufficiently involved in audit. You are a principal auditor, you should be sufficiently involved in audit, right? So whether I should accept a principal auditor's position, you need to ensure that your own participation is sufficient to act as principal auditor. So you need to see the materiality of portion which you will audit. You need to see the degree of knowledge regarding the components business which you have, and the risk of material misstatement in components financial statement. So the materiality of portion of financial statement which you will audit, how much knowledge I have regarding the business of component, and risk of material misstatement in the financial statements of component, and what extra procedures I can do to ensure that I can be sufficiently involved in audit. The performance of additional procedure resulting in you being sufficiently involved in audit. Now, as such, principal auditor is not responsible for the work which is given to other auditor, because other auditor is also chartered accountant. You are not responsible for the work which is done by other auditor unless there arose suspicion. You have a suspicion, doubt regarding the work carried out by him, and still you relied on him, then you will be responsible. The principal auditor would normally be entitled to rely upon the work of other auditor unless there are special circumstances which makes him essential to visit the component or examine the books on its own. Okay. Now, whenever you're planning to use the work of another auditor, you need to check his professional competence. If he's not a member of ICI, means if it's a foreign branch, तो आपको उसका professional competence to be checked. Now, you need to obtain sufficient appropriate audit evidence. As a principal auditor, I need to obtain sufficient appropriate audit evidence that the work of other auditor is adequate for my purpose. Okay, so how do I obtain sufficient appropriate audit evidence that his work is adequate for my purpose? So for that, what I'll do? The one, I'll advise the other auditor for the use of his work which I need to do. I need to inform him what is the use of your work I'm going to do, so he can do it accordingly. Okay, I'll also inform him about the areas which require a special audit consideration, the timetable for completion of audit, and also advise about the significant accounting, auditing, reporting requirements, and I'll take a representation is complied with it. Okay. The principal auditor might discuss with other auditor the procedures applied. Okay, so this is what I advised him. I advised what is the use of his work. I would inform him basically the areas which require special audit consideration, timetable. I'll advise him regarding significant accounting, auditing, reporting requirement. I'll take a representation is complied with it. Now, the principal auditor might discuss with the other auditor the procedures what's done by other auditor. Now, I cannot tell the other auditor to give me a copy of documentation, but I can have the other auditor fill a checklist or a questionnaire. I can have other auditor fill a checklist or a questionnaire so that I'm able to understand what our procedure he has done, and procedure what he has done is sufficient, appropriate or not. Okay. The principal auditor should consider the significant findings of other auditor, and then you may consider it appropriate to discuss with other auditor the audit findings, etc., whatever are thereof component. And you may also go and do a supplementary test. Achha, even though there's some other auditor at branch, if I want to go and do, I can go and do a supplementary tests. Fine. The principal auditor should document. The principal auditor should document in your working paper. What you should document? The financial information which was audited by other auditor, the significance of that financial information to entity as a whole, the names of other auditor, etc. That all needs to be documented. And when other auditor, the branch auditor gives a modified report, other than unmodified, other than unmodified is modified. If branch auditor gave a modified report, you need to decide how you want to deal with that in your report. If he has given qualified, doesn't mean I also should give qualified, because matter might not be relevant for the company as a whole. I may still give a clean report. Okay. This point is important. Principal auditor's procedure, as well as this was also important, acceptance as principal auditor. You should be sufficiently involved in audit. Now, there has to be a coordination between both the auditors, sufficient two-way communication should be there. That's fine. Division of responsibility. The principal auditor would not be responsible for the work which is entrusted to other auditor, except in circumstances which should have arose suspicion about the reliability of the work performed by other auditor. And you need to clearly write down in your audit report the number of branches or subsidiary which is audited by other auditor. In your documentation, you keep the names also. In your audit report, no need to write the name of each and every branch auditor. Just number of branches or subsidiary which is audited by someone else. And if at all you feel the work of other auditor is not reliable, so you go and do it. And I don't have a time to go and do it. You are unable to obtain sufficient appropriate audit evidence. You modify your audit opinion. Clear? Okay. Question number 2. Question number 2. Okay, 8 branches audited by 8 branch auditor. You want to be sure that branch auditors ka work is adequate for your purpose. And he insisted on branch auditor to get familiar with checklist he has prepared, and also told them to share working paper. See, I tell branch auditor to fill a checklist or a questionnaire is fine. I cannot tell branch auditor to give a copy of working paper. Working paper of branch auditor are the property of branch auditor. Working paper of branch auditor are the property of branch auditor only. He may give at his own willingness to me. I cannot force him to give the working papers to me. Okay. So over here it's SA 600 using the work of another auditor. Whenever another auditor is appointed for component, you will be entitled to rely unless there are some special circumstances. And you need to perform procedures to obtain sufficient appropriate audit evidence that his work is adequate for your purpose. So for that, I advise him regarding the use of his work. I'll inform him about basically the significant special audit consideration wale areas. I'll advise him regarding significant accounting, auditing, reporting requirements which are there, and I can discuss with him. I might discuss with him the procedure which he has done by way of how the checklist or a questionnaire I'll tell him to fill. That all is fine, but I cannot ask for the working papers. Okay, next one, question number 3. Next one, question number 3. Okay, RN Company is a statutory auditor of S Limited, and Pollution Control Board has given an order for closure of factory. Oh, so there's a going concern issue, and company has challenged it in the lawsuit. Pending the outcome, the financials are prepared on going concern. There's a material uncertainty related to going concern. And some of the branches are audited by other auditor. So what are the reporting responsibility of RN Company? Acha, so there are material uncertainty related to going concern. If it's adequately disclosed in financial statement, clean report with extra para drawing attention. If it's not adequately disclosed in financial, you're required to give a modified report. Plus, some branches are audited by other auditor. I need to write down in my report number of branches audited by other auditor. So Over here, check out if auditor concludes adequate disclosure is made in financial unmodified with extra para drawing attention. If adequate disclosure not made, you will be giving a qualified or adverse opinion. And as far as SS 600 concerned, basically यहाँ पे you need to clearly state the division of responsibility, the number of branches which has been audited by other auditor. This is SA 600 going to SA 610. If you're feeling bored or if you're feeling kind of, sir, get yourself fresh, shake it, baby. Chalo. These are all small things to keep yourself fresh. Okay, going on to SA 610, relying upon the work of internal auditor. Relying upon the work of what? Internal auditor. Acha, now this standard mein there are two things. One, we use the work of internal audit function. So there's an internal audit function, internal audit going on in the company. Whatever they have done, I'm using some of the work, or I use internal auditor to provide direct assistance to me. I use them to provide direct assistance. They've already checked 10 area. I'm using them to check 11th area for me. That. Okay. But whenever I use the work of internal auditor, the sole responsibility of audit opinion is only on me, and that responsibility is not shifted. The sole responsibility of audit opinion is on me only. It is not shifted. Okay. Okay. So now four requirements are there. One, determining whether, in which areas and what extent we can use the work of internal audit function. Achha, if using, now what to do? That's requirement 2. Third one, determining whether, which area, what extent I can use internal auditor to provide direct assistance to me, and if using them to provide direct assistance, now what to do? The 4 requirements. Let's go line by line. Okay, determining whether, which areas, what extent I can use the work of internal audit function. Okay, so determining whether I can use the work of internal audit function, try to evaluate the internal audit function. We are evaluating the internal audit function. Okay, so how do I evaluate internal audit function? The extent to which the internal audit function's organizational status, the status given to them in the organization, and the policy procedures followed by them, how it supports the objectivity. The organizational status, policies, procedures of internal audit function, how it supports the objectivity. Number 2, the level of competence, who are the people over there. And number 3, do they have a systematic and disciplined approach? So whether I should use their work depends on objectivity with which they have done the work, the level of competence, and do they have a systematic and disciplined approach. Achha, now, in which areas, what extent? In which areas, what extent? So for that, I need to consider the nature and scope of work performed by them. Okay. This SSA is try to use less of their work, do more yourself only. And even after using their work, even if you are using the work of internal audit function, you should be sufficiently involved in audit. And if you have decided, acha, so which areas, what extent, I'll try to see what all work they have performed. Then this SSA is do it more of yourself. Even after using the work, so you should be sufficiently involved in audit. And if you have decided that you're going to use the work of internal audit function, before using, communicate with the TCWG the planned use of work of internal audit function which you're going to do. Okay. Now when you are using it, now we are using it. Pehle tha determining whether, which area, what extent we can use. Now when we are using it, acha, when we are using the work of internal audit function, I need to ensure that their work is adequate for our purpose. Okay. You should discuss the planned use of the work with the internal auditor. You should read the internal auditor ke report, and you should obtain sufficient, you should basically perform sufficient audit procedures in order to ensure that their work is adequate for your purpose. Now, how do I understand their work is adequate for my purpose? So their work should have been properly planned, performed, supervised. They should have obtained sufficient appropriate audit evidence, and the conclusions reached by them should be appropriate in the circumstances. Okay. Now, what should be your nature and extent of your procedures? Okay, you're using the work of internal auditor. With that, what should be my other procedures? The nature, extent of external auditor's audit procedure. Your other procedures will depend on the judgment involved, the risk involved, how objectively the work was performed and the level of competence with which the work was performed. Acha, if it was performed very objectively with a great level of competence, then I may not do other things much. But risk is high, I may do other things much. Judgment involved is high, their judgment, my judgment may differ, so I may do other things also. So what you should do will depend on following factors. Together with using their work, what I should be doing depends on following things. Now, third, determining whether, in which areas, what extent we can use internal auditor to provide direct assistance. See, they checked 10 areas for management. Now I want them to check 11th area for me. So using them to provide direct assistance. So if using internal auditor to provide direct assistance is not prohibited by law, if it's not prohibited by law, this essay allows, you can do it. But whenever you're doing it, you need to evaluate existence and threats to objectivity and competence. So try to see the threats to objectivity and the level of competence. If you feel they will not be able to objectively do the work, don't use their work. So don't basically use them to provide assistance. If you feel they don't have a competence, don't use them. Okay. You should not use when there is significant threat to objectivity or the lacks sufficient competence. Now, this line important. Okay, that was determining whether to use. Now, which areas, what extent? Which areas, what extent I can use them to provide direct assistance? So they're telling you should not use them for following things. Following things, we don't use them. Okay, where I should not use them? 1. The procedures that involve making significant judgments. Wherever significant judgments are involved, don't use them. Okay, wherever higher risk of material misstatement is there, don't use them. Okay, work was done by them only. I cannot tell them to check their work. The work relates to work performed by them. I cannot use there. And 4, decisions which I have to make in accordance with this essay. Decisions which I have to make in accordance with this essay, that decisions I only have to make. I cannot tell them to make decision on my behalf. Okay. So wherever significant judgments involved, wherever risk is high, work which was done by them only, or decisions which I have to make, that areas I should not be using them. Achha, if you have decided you're going to use internal auditor to provide direct assistance, you need to communicate to TCWG the planned use that you're going to do. Now, when you are using them, okay, when you are using them to provide direct assistance, now can I say they are checking 11th area for you? Okay, take a representation from management, they are not going to interfere in between. Take a representation from internal auditor that they will maintain confidentiality. Plus, they're working for you now to direct, supervise, review the work which is performed by them. Clear? Okay, now going on to question number 4. Going on to the question number 4. Okay, Mr. Anand is appointed as a statutory auditor of Xerox Limited. Xerox is required to appoint internal auditor as per the statutory provisions. Okay, they appointed Bhanu. Achha, the external auditor asked internal auditor to provide direct assistance regarding evaluating significant accounting estimate. No. Wherever significant judgments are involved, we can't use them. Identifying and assessing the risk of material misstatement. Achha, identifying, assessing risk of material misstatement. This is also an area where significant judgment is involved. So both areas not allowed. Okay, we should not use them where significant judgments are involved, higher risk of material misstatement is there, or work was done by them only, or decisions which I had to take. Now, which are the areas where significant judgment is involved? The significant judgment will include assessing the risk of material misstatement, evaluating significant accounting estimate. Both of them, assessing risky areas and evaluating significant accounting estimate, they both come under significant judgment wale things. You cannot use internal auditor to provide direct assistance for these areas. Achha, the question is, sir, where I can use? Okay, where I can use, which areas I can use the work of internal audit function? To give examples of work that can be used. 1. Testing operating effectiveness of control. They've already tested control. I can use that work. Substantive procedures, what they have done involving limited judgment. Observation of inventory counts. Okay, tracing transaction through the financial information system, testing of compliance with some regulatory requirement. So these are areas where I can use them, or I can use the work performed by them. Moving ahead, going to SA 620. Going to SA 620. Okay, SA 620 is using the work of an expert. Here the expert is auditor's expert. See, management expert is a person appointed by the management who helps management in preparing the financial statement. Auditor's expert is a person appointed by the auditor and who is helping auditor in obtaining sufficient appropriate audit evidence. Fine. And that expert, whether management expert or auditor expert, they will be a person or a basically organization possessing expertise knowledge other than in the field of accounting and auditing. Fine. Whenever I'm using the work of an expert, the responsibility is not shifted. The entire responsibility of opinion is still on me only. The question arises whether I should use expert. If I'm using expert, how do I determine their work is adequate for my purpose? Okay, whether we need expert. Whether we need expert or not, it depends on one, materiality of item. If item is immaterial, leave, no expert required. The materiality of item, nature and complexity of item, and other evidence is available for that item. This, depending on that, you decide whether you need an expert or not. Acha, together with expert, what should be the nature, timing, extent of your other audit procedures? Okay, I'm using expert. With that, what should be the other audit procedure? That will depend on one, the matter, the risk involved, significance of expert work to the overall audit. Okay, your knowledge and experience about the previous work with expert. If I know expert has done fantabulously, I may not do much. And last, whether is subject to your firm's quality control procedure. If expert follows my firm ke quality control procedures, then I can rely more on him. But if he follows less of my quality control procedure, I'll rely less on him. I'll do other things more. So what other things you need to do depends on certain factors. Okay. Now, before you appoint an expert, you need to check his competence, capability, objectivity. You should also check his field of expertise. The competence, capability, objectivity, field of expertise before appointing him. Whenever you appoint an expert, you need to enter into an agreement with the expert. Important. Whenever you appoint, you need to enter into what? Agreement with expert. Okay, so now agreement in writing. The agreement will contain following things. Okay, the agreement will contain what? Following things. One, the nature, scope, objective. What is the nature, scope, objective? The roles and responsibility of auditor, the roles and responsibility of expert. Okay. The nature, timing, extent of communication, or the way in which he will basically give me reports. And need to observe confidentiality requirement. I'll also write it basically in agreement that you need to maintain confidentiality of my client's information. So why do we enter into an agreement with the expert? To clarify nature, objective, scope, roles and responsibility, to basically clarify nature, timing, extent of any communication which will be held between both of us, the way they have to give report, and they have to maintain confidentiality of my client's information. Acha. There's a need for a more detailed agreement. Okay, when do you need more detailed agreement? If question comes, the need for more detailed agreement comes when? The more detailed agreement is required when expert will have access to sensitive or confidential data, highly confidential data. So you need a more detailed agreement. Second, the roles and responsibilities are different than what generally are. Multi-jurisdictional, legal or regulatory requirements are applicable. The matter is highly complex. You have not worked previously with expert. Then in that case, you need more detailed agreement. And the greater the extent of auditor's expert work and its significance. The auditor expert ka work is very, very important to the overall audit. That's why I need a more detailed agreement with him. So if question is, why do you need agreement will clarify what all things? It's for this to clarify this thing. Why do you need or factors affecting requirement of more detailed agreement? This is the answer. Okay. Now, expert you appointed, agreement done, he would have done his work. You need to evaluate adequacy of his work, whether his work is adequate for your purpose. So you need to basically, so you should evaluate the adequacy of expert's work. How? You need to see the relevance, reliability, relevance, reasonableness of expert's finding with your other audit evidence. Whether his work and my other audit evidence, whether they are matching, not matching. Okay. You need to basically, if at all significant methods, assumptions are used, relevance, reasonableness of those assumptions and methods. And if data, some source data used, whether it's complete, accurate, relevant or not. Okay, the one I need to try to see whether the expert's finding are matching with my other audit evidence. Achha, if he has used some significant assumptions and methods, whether that assumptions and methods are relevant and reasonable. Achha, if he has used some source data, that source data is relevant, complete and accurate. ठीक है. Achha, if you feel expert का work is not adequate, achha, after his work is done, you evaluated his work, you feel his work is not adequate, discuss with the expert what further procedure can be done. Discuss with that expert the further procedure what can be done, or you may do anything else, including hiring a new expert. Now question, can I give a reference of expert in my audit report? Can I give the reference of expert in my audit report? Audit report में क्या उसका नाम लिख सकता हूँ? Clean report, no. Modified report you may write, but by writing the name, the responsibility is not shifted. So similar to service organizations auditor. As sir, internal auditor, if I use the work of internal auditor, can I write his name? Answer is no, you cannot write only. Clean report, modified report, anywhere you cannot write for internal auditor. As sir, branch auditor, I use the work, I have to mandatorily write the number of branches audited by other auditor. Fine, question number 1. Question number 1. Okay, when management has used a management expert, whether auditor should use auditor's expert for the same thing? Management has used management expert. So for the same thing, should I use my expert? Okay, that depends on nature, scope, objective of management expert ka work. It depends. Nature, scope, objective of management expert's work. Whether management expert was employed by the entity or he's basically an independent party providing services, he's an employee or an outside person. The extent to which the management can influence the management expert. The management expert का competence, capability, ठीक है. Whether is subject to any technical performance standards, whether he has to follow some standards, etc. So these are all things I'll see. So whether management expert has worked properly or not, that I'll check to decide whether I need to bring my expert or not. Okay, going to question number 2. Okay, question number 2. Pay attention. You've taken the CA Dabbu has been appointed as auditor and he come across certain difficulty. He decided to take services of Mr. J. So can I say you're appointing an auditor's expert? You're appointing auditor's expert. Now I need to evaluate. Whether his work is adequate for my purpose. For that, what are the specific procedures which you will do? Achha, the question is not how you will evaluate. See, how I'll evaluate his work? So here 3 things. How I will evaluate his work? I'll try to see the relevance, reasonableness of his finding with my other audit evidence. If he has used significant assumptions or method, whether they are relevant and reasonable or not. If he has used some source data, whether it's accurate, complete, basically or not. So this is how. Question is not how. Which procedures you will use for basically evaluating the work is adequate. So how ye tha. Which specific procedure, name the procedures. Name the procedures. So what all procedures you can do? Okay, the one, you can inquire with the expert. Do inquiries. Review the working papers of expert. Do some corroborative procedure. Other procedures. Corroborative procedure like observing expert's work, examining published data, or confirming the relevant matters with third party, or doing some detailed analytical procedures, or reperforming calculation, having discussion with another expert to understand whether his work is adequate or not, and discussing the expert's report with management. Acha, to question is not how. Question is what procedures you will use to evaluate. Name the specific procedures. I'll inquire with expert, I'll discuss with other expert, I'll basically discuss with management, I'll review his working papers. I'll do some corroborative procedures. Okay, next one, question number 3. Next one, question number 3. While doing audit, Ram, the auditor requires report from expert. What type of reports or opinion you can obtain, and to what extent you can rely on the same? So which type of reports I can obtain from expert? Give examples. Okay, the one, valuation of complex financial instruments, uske related report. Actuarial calculation of liability, estimation of oil gas reserve which is there, environmental liability का valuation, interpretation of contract के related I can take the help of expert, analysis of complex tax issues I can take the help of expert. ठीक है. And how do I, and to what extent you can rely on same? To what extent you can rely on same will depend on. So you need to evaluate the adequacy of his work. How to evaluate? I need to basically check whether his work is consistent with my other evidences. The method, assumption used by him, they are relevant, reasonable. Data used by him is proper or not. That is what I'll be doing. Okay, question number 4. Okay, question number 4. You took help of an expert for some fair valuation. For some fair valuation, you're working for the first time together. Remember, if it's first time, you need a more detailed agreement, but you don't have any agreement only. You don't have any agreement only, that's wrong. You need to have a more detailed agreement because you're doing it first time together. Done. This is your SA 620, 600 series over, starting with 700 series. Okay, we'll finish one standard SA 700, then we take a break. We'll finish one standard 700, then we take a break. Keep smiling, pay attention. Any doubts are there, feel free to ask. Are you enjoying? Okay, now SA 700 is auditor's report on financial statement. This is about your report which you are giving. Two things. See, why do you need a specified format of audit report? So this promotes consistency in audit report. It promotes what? Consistency. But there may be individual circumstances which needs to be reported. So that also gives you some flexibility. So this essay promotes consistency but also recognizes the need for flexibility to accommodate a particular circumstances of individual jurisdiction. It promotes credibility in global market. It helps the user to understand and identify any unusual things which have occurred. So if at all I'm giving a modified report, so where that qualification will come, there's a fixed place. So it becomes easy for the user to understand whether any unusual things are there or not. This essay is basically for general purpose financial statement, but it can also be adapted for special purpose financial statement as well. What are general purpose financial statement? The financial statement which are prepared as per general purpose framework. General purpose framework is considering the information needs of wide range of users. Considering the information needs of wide range of users. And they say that the financial reporting framework, the way financials are presented, it can be two ways. The financial reporting framework can be as per two ways. One, it can be one as per the compliance framework, or second, fair presentation framework. Under compliance framework, the financial statements are prepared complying with certain laws and regulation. Under fair presentation framework, the financial statement comply with law, but it also acknowledges. Acha, to compliance framework may we just comply with law. Fair presentation we comply with law and we also acknowledge that there may be certain situations where there might be some additional disclosures required beyond the requirement of law, and sometimes in extremely rare cases we might be required to deviate from the requirement of law, but that is also to achieve a fair presentation. So under fair presentation you comply with law plus you give extra disclosure. Now whether compliance framework followed or fair presentation framework to be followed depends on laws and regulation. If law or regulation, like suppose Companies Act wants a fair presentation framework. But if law or regulation is silent, then in that case, the management will decide whether the financials are prepared based on compliance framework or fair presentation framework. And whenever there's a compliance framework, used, then only the word true and fair will come in our opinion. If management says we prepared financial as per XYZ laws of India, they'll write the financials are prepared as per XYZ laws of India. But if at all they go for fair presentation, then I say the financial statement shows a true and fair view. So if financials have been prepared by fair presentation framework, then only we use the word true and fair view in our opinion. Clear? Okay. Now, what do you mean by the word unmodified opinion? The opinion expressed by auditor, where auditor concludes that the financial statement are prepared in accordance with applicable financial reporting framework, then you give a unmodified opinion. Achha, now two things are there in the standard: forming an opinion, expressing clearly your opinion. Okay, one, forming an opinion. We need to form an opinion whether the financial statement as a whole are prepared in accordance with applicable financial reporting framework. Okay, for that purpose, what do we do? For that purpose, what do we do? So we need to make a conclusion. We need to make a conclusion about one, whether we obtain sufficient appropriate audit evidence, and second, we need to conclude whether the uncorrected misstatements are material. Now see, if uncorrected misstatements are material, or you are unable to obtain sufficient appropriate audit evidence out of any of this thing, problem is there, we have to give a modified report. So one, you have to make a conclusion whether you obtain sufficient appropriate audit evidence and whether uncorrected misstatements are material or not. Acha, what are the specific evaluation? For that purpose, the auditor evaluates. So question comes, what are the specific evaluations for forming an opinion? So what are specific evaluation? This one, you need to see financial statement adequately disclose the significant accounting policy. They have been selected and applied consistently. Estimates are reasonable. The presentation is relevant, reliable, comparable, understandable. Adequate disclosures, whatever are required, are done. The terminologies used are appropriate, including the titles of financial statement. And if they are using a fair presentation framework, the overall presentation structure, content, etc., the financials are shown in a manner that it achieves fair presentation. The question comes, what are the specific evaluation while forming an opinion? Answer is the C point, C and D. Which are the specific evaluations? Okay. Now forming an opinion, if you conclude that financials are not free from material misstatement, or you are unable to obtain sufficient appropriate audit evidence, you need to modify your report. Now how to give a modified report is essay 705. This essay we learn only the clean report. This essay we are learning only what? Clean report. So coming to your auditor's report. Forming an opinion done. Now expressing clearly your opinion. You have to express your opinion clearly. It will be in form of a written report. Following are the elements of your audit report. One, title, independent auditor's report. Addressee, appropriate addressee. For a company, it's addressed to the shareholders. Okay, then comes auditor's opinion para. There are two paras over here. One is the intro para and second is the actual opinion. Intro para. Now intro para, we have to cover these 5 things. Intro para. We have to cover these 5 things. We need to identify the entity. We need to state financial statements have been audited. We need to give the titles of each financial statement. We need to give the date and period covered by each one of them, and we also need to refer to the notes, including a significant accounting policy, other explanatory information. How do we write intro para? We have audited the accompanying financial statement of ABC Limited, which includes balance sheet as at this date, profit statement of P&L and cash flow for the year ended on this date, and a summary of significant accounting policy and other explanatory information. This is how we write intro para. Then you come to the actual opinion. So there are 2 paras here. Actual opinion. If it's a compliance framework, like they say the financial statements are prepared as per XYZ laws of India, will report the financial statement are prepared in all material aspect as per XYZ laws of India. But if at all they are having a fair presentation framework, then the word true and fair comes in our report. If it's a fair presentation framework, we'll use the financial statement shows a true and fair view. Or we write the financial statement presents fairly. This is only when there's a fair presentation framework. If it's a compliance framework, we'll basically have they are prepared in accordance with XYZ laws of India. Okay, so first was title, then addressee, then opinion. Now, basis for opinion, there are 4 general sentences which we write. Basis for opinion, 4 general sentences. 1. We need to tell that the audit is conducted in accordance with essay. Then we say our responsibility as per this essay is given in a separate para named as auditor's responsibility with regards to audit of financial statement. वो para में है. Plus, we also make a statement that we are independent of the entity in accordance with the relevant ethical requirement, including the code of ethics. So that we make, and we believe that we have fulfilled we believe that we have obtained sufficient appropriate audit evidence in order to base our audit opinion. The 4 general sentences. The audit was conducted in accordance with standards on auditing issued under section 143(10) of Companies Act. Our responsibility as per this standard is given in a separate section named as auditor's responsibility in relation to audit of financial statement. We were independent of the entity in accordance with the relevant ethical requirements, and we have fulfilled other ethical responsibilities whichever are there, including the code of ethics. We believe that the audit evidence we obtained is sufficient appropriate to provide a basis for our audit opinion. So this is how you need to have basis for opinion para, 4 sentences. Okay, after that, if there's a material uncertainty related to going concern, it's adequately disclosed in financials, we have to draw attention, it comes here. To draw attention, it comes here. Okay, then there's a key audit matter. Key audit matter is only for the listed entities. Okay, for the listed entities, which were the matter which were of most importance during the audit of current period financial statement, where auditor focused more. You need to describe that key audit matter. So give some intro. Well, intro do, and then you describe each of the key audit matter, why they were identified as key audit matter, and how did you deal with it. Okay? This is covered in essay 701. I'll come to 701. After that, responsibility for financial statement. Okay, the management responsibility para. Under management responsibility para 1, they are responsible for preparation, presentation of financial statement as per the applicable financial reporting framework. Achha, and if they are following a fair presentation framework, preparation of financial statement which shows a true and fair view, ऐसा लिखेंगे. Plus, they are also responsible for establishing internal controls. So, regarding preparation of financial statement, internal control. Plus, management is required to make an assessment regarding a going concern, whether they are going concern or not, and whether a material uncertainty exists, casting a doubt on entity's ability to continue as going concern. So this is again assessing entity's ability to continue as going concern, and TCWG has a responsibility for oversight of financial reporting process. Clear? Now comes auditor's responsibility, 3 big para. In your auditor's responsibility, 3 big para. First, what do we write? We write that our objective is basically to obtain a reasonable assurance whether the financial statement as a whole are free from material misstatement, whether due to fraud or error, and issue a audit report which includes our opinion. So our objective is to obtain reasonable assurance, issue audit report. Now word came reasonable assurance. What is reasonable assurance? Reasonable assurance is a high level of assurance but not a guarantee that audit conducted in accordance with essay will always detect a material misstatement when it exists. Achha, word came material misstatement. Misstatements are material. Misstatements can arise due to fraud or error, and they are material if they can influence the decisions of users of financial statement. This is para 1. We are talking about our objective. Then the word came basically reasonable assurance, and the word came material misstatement. Now, how do we do audit? That's second para. And third is communication with TCWG. Okay, second para, how do we do audit? So as a part of audit, we exercise professional judgment. We maintain professional skepticism throughout the audit. We also identify and assess the risk of material misstatement, whether due to fraud or error, to design and perform procedures responsive to those risks, and we obtain sufficient appropriate audit evidence to provide a basis for our audit opinion. Okay? Risk of non-detecting a material misstatement due to fraud is always higher than risk of non-detecting a material misstatement due to error. Then we obtain understanding of internal controls. Relevant to audit. Why? In order to design the audit procedures which are appropriate in circumstances, but not for the purpose of expressing opinion on those controls. Now, if we are reporting on control under 143 subsection 3 clause I, remember IFC reporting? If at all we are doing IFC reporting to this line, but not for the purpose of expression of opinion on effectiveness of internal control, will go away. Uske badle, what do we write? So we also have a responsibility to express an opinion on internal control as per section 143 subsection 3 clause I, whether that internal financial controls are operating effectively or not. So that will be adding. Achha, third, we evaluate the accounting policies used by the management, the appropriateness of accounting policies used, reasonableness of accounting assumptions made by the management. Achha, we conclude on appropriateness of use of going concern basis of accounting, and based on evidence whether a material uncertainty related to going concern exists. Achha, if that material uncertainty exists, so what is our responsibility? If it is appropriately disclosed in financial statement, we are required to give a we are required to basically draw attention to it, and if it's not properly reflected in financial statement, we are required to modify our opinion. And lastly, if it's a fair presentation framework, so we evaluate the overall presentation structure, content, including the disclosure, and we see whether the financial statement shows a true and fair view, or it basically has a fair presentation. So this is basically para number 2. How do you do audit? So 1, we exercise professional judgment, maintain professional skepticism. We identify and assess the risky areas, implement procedures, obtain sufficient appropriate audit evidence for it. We obtain understanding of internal control. We evaluate accounting policies, accounting estimates. We conclude on the use of going concern assumption by the management. यहाँ पे word conclude आएगा. And last, we try to see whether we evaluate the overall presentation, etc., whether it achieves a fair presentation. Achha, plus if some of the work is done by other auditor, if some work is done by other auditor, so can I say we need to write this many branches were audited by other auditor, that also will write it in that responsibility para. So this many branches were audited by other auditor, that also will be written over here. Achha, third para in auditor's responsibility. Third para in auditor's responsibility is about communication with TCWG. This is based on SA 260, 265. So we write down over here that we communicate to TCWG amongst other things, what? The planned scope and timing, significant audit findings, and significant deficiencies in internal control. Achha, we also provide a statement to TCWG that we have complied with the ethical requirement relating to independence, and we have communicated all the relationships and other things which have a bearing on independence and the related safeguards which we have taken. Achha, and the C point, this is only for listed entity. For listed entity, we have this key audit matter. So we write down, out of the matters communicated to TCWG under SA 260, 265, some of the matters are identified as a key audit matter. Key audit matter are those which in auditor's professional judgment are of basically most significance during the audit of current period financial statement. Okay, now sometimes your key audit matters are not communicated because law or regulation precludes such communication, or the communication ke basically the adverse consequences of doing so will outweigh the public benefit. So that is basically as per SA 701. If listed entity, then this is required. Okay, so such a big auditor's responsibility, 3 big paras were there. Where do I show it? Either you show it as a part of the audit report only, body of report, or you show it as an annexure, or you you can give a reference to a website. You can give a reference to a website of appropriate authority that our responsibility is written in this website here. This is only if it is specifically allowed by law or regulation. As of today, law or regulation is silent. So today, this point does not come into picture. So there was a question related to this in objective last year. Okay. So if law or regulation specifically permit, you can give a reference to the website of some appropriate authority where this responsibility of auditor is put up. Okay. Now, other reporting responsibility. Now see, 1, we have a reporting responsibility as per SA. Second, we have a reporting responsibility as per Companies Act, section 143, subsection 3, 10 matters, CARO 21 matters. So where that all will come? That all will come under your other reporting responsibility, report on other legal and regulatory requirements. Then comes the signature. If at all individual is appointed, individual has to sign. If a firm is appointed on behalf of firm, any partner who is a chartered accountant holding COP can sign. Partner's name should also be coming. Firm registration number should also be coming. Partner ka COP, basically partner ka membership number, that also should be coming. ठीक है. Place of signature where you are signing, date is the date when you are signing. Clear? Okay, if the audit report format is given under law and regulation, follow the format given under law and regulation. Follow the format given under law and regulation. Then don't say that the report is as per essay. You say report is as per essay only if that report also has this all 12 elements. Okay, if you are called upon to give a report, if you are called upon to give a report as per Indian auditing standard as well as international auditing standard, what to do? Should I give 2 reports or 1 report? You're called upon to give a report as per Indian auditing standard as well as international auditing standard. Should I give 2 report, 1 report? You may give 1 report if there's no conflict between the requirement of Indian auditing standard, international auditing standard, and they also have this minimum 12 elements present. There's no conflict, report includes minimum 12, you can have 1 report covering both. But if there's a conflict or they don't have these 12 elements, then you have to give 2 separate opinions. As a supplementary information presented with the financial statement, if there's some supplementary information presented with financial statement, so we need to first understand whether it's a part of financial. If it's an integral part of financial statement, it has to be covered by your opinion. But if it is not an integral part of financial statement, it should be distinguished from financial statement. Acha, the way it is presented, it doesn't look like distinguished thing. Request the management to distinguish it. So if it is not an integral part, it should be distinguished from financial statement. If it is not basically shown properly, ask the management to change how it is presented. If management refuses it, write about it in your audit report under your other matter paragraph. Under other matter paragraph, you can write down that this supplementary information given is not audited. So you're clarifying your audit. Okay, illustration is basically the illustrative format of audit report. We already did all the things. Over here. Directly going to question number 2. Okay, in your question number 2, RTP May 23, RTP November 23, the company, while preparing financial statement, prepared one additional P&L account which discloses only specific incomes and specific expenses. So you prepared one extra P&L. Okay. Now, as such, it's not covered under applicable financial reporting framework. So you are not able to understand additional P&L. It is not covered. It's not covered under applicable financial reporting framework. Is it a part of financial? As such, no. It's a supplementary information presented. It's not a part of financial. It should be distinguished, separated. Okay. So additional P&L is not an integral part of financial statement. It should be presented in a way it is clearly differentiated. If not, you are required to write about it in your other matter paragraph. Clear? Okay. Question number 3. Question 3 is kind of bit offbeat one. RTP May 18 May it was given. Bit offbeat. See, we evaluate whether financial statements are prepared in accordance with the applicable financial reporting framework. Okay. The evaluation includes qualitative aspect. of entities' accounting practice. Account key policies, what they've used. We try to evaluate that, and we also look for possible bias. Okay, the qualitative aspect. Advise about the qualitative aspect of entities' accounting practice, including indicators of possible management bias. Okay. The management makes a number of judgments about the amounts and disclosure. Essay 260 or discussion with TCWG. One of the things which we discuss is basically the policies followed. The qualitative aspect of accounting practices, we have a discussion with TCWG. And in considering the qualitative aspect of accounting practice, you may become aware of possible bias. Sometimes they have kept a policy in a way that they're able to show higher revenues. You may become aware of any possible bias. Okay? The auditor may conclude the lack of neutrality when I conclude there's a lack of neutrality. Selective correction of misstatement. I say some correction, they do selective. One which increases profit, they do it. One which decreases profit, they don't do it. And there's a possible bias in management making estimate. Okay. Essay 540 is there talking about the possible management bias. Acha, if there is a possible management bias, if there is a possible management bias, it does not mean there is a misstatement. It does not mean there is a misstatement, but you may have to go in detail and check really there's a misstatement or not. There's a possible bias. I'm not telling, hey. So if you feel there's a possible management bias, you may have to go in depth and see whether there's really any misstatement or not. Indicators of possible bias do not constitute misstatement for purpose of drawing conclusion on reasonableness of individual accounting estimate. अच्छा, मैनेजमेंट थोड़ा थोड़ा बायस था, वो इंडिविजुअल अकाउंटिंग एस्टिमेट्स पे इट इज नॉट देयर, बट हाउएवर if I feel everywhere management is kind of biased, it may affect my overall view. So individually things may not be affected much, but overall view it may get affected. However, it may affect the overall auditor's evaluation whether the financial statement are free from material misstatement. Next question, very simple. Key phases in audit. Key phases in audit: planning, you identify risky areas, you evaluate control, you test the things, and you report. So it's a simple one, you just need to read it once. Planning, risk and control evaluation, testing, reporting. This is SA 700, 701. I'm starting after the break. This is 700, 701. I'm starting after the break. 15 minutes break. It's 11 or 2. We meet back. Chalo, 18 minutes. 18 minutes. So break. We'll be back at 11:20. And then we'll finish off till 800 series. So 810 we need to finish. SAE, SRE, SRS, I'll be doing it in evening with professional ethics. Enjoy your break. See you after the break. Okay, hi, welcome back. Give me high five, thumbs up. We finished till SA 700 and now we need to start with 701. How many standards to be done more? 701, 705, 706, 710, 720, 800, 805, 810. 8 standards to be done. Let's finish up this 8 standard. We need to finish it by 12:30. Okay, again we have a session in evening. Evening it's 5 p.m. to 10:30 p.m. and we'll do the remaining standards and we'll do professional ethics today. Okay, so moving ahead, going to SA 701, communication of key matters. Communication of key matters in independent auditor's report. Okay, now first of all, what do you mean by the word key audit matter? And this is only for a listed entity. Now see, key audit matter, if I just go down at the end, key audit matters are those matters which in auditor's professional judgment were of most significance during the audit of current period financial statement, and they are selected out of the matters which we communicate to TCWG. Remember, we communicate important matters to TCWG as per SA 260. Out of that, few matters which are most significance for the audit of current period financial statement, they are decided as key audit matter. This essay requires that we communicate the key audit matter in our audit report. Now, sir, purpose. Why we should communicate? The purpose is to enhance the communicative value of your audit report. Communicating key audit matter will assist the intended users. The users will be able to understand the entity better, areas of significant management judgment in a better way, and this will help them to better engage when they attend the meetings. So when they attend AGM, EGM, they're able to better engage with the management. It will provide the intended user to further engage with management and TCWG about certain matters related to entity. Now, communicating key audit matter is not a substitute for a disclosure in financial statement. Management did not do a disclosure in financial statement, that's why I'm adding it in key audit matter. No, it's not a substitute for that. It is not a substitute for expressing a modified opinion. It is not a substitute for that material uncertainty related to going concern para. If there's a material uncertainty related to going concern, keep it there only. Keep it there only. It's the key audit matter is not a substitute for that, and key audit matter is not a separate opinion on individual matters. We are not giving a separate opinion on those matters. The opinion is on the overall financial statement only. We are just telling that this were the key audit matter. So which were the key audit matter? How did we dealt with it? That needs to be basically written in your audit report. Fine. And SA 705 says, that if you are giving a disclaimer of opinion, no need to write down the key audit matter in your audit report. Okay, how do I determine key audit matter? How do I determine key audit matter? So we consider the following: the areas where high risk of material misstatement is there, we will be focused more, that will become a key audit matter. Areas where there is a high estimation uncertainty, okay, and significant event or transaction that has occurred during the period. Like this year we came out with the IPO, the utilization of IPO proceed will become a key audit matter. Okay. How do I communicate a key audit matter? There's a separate heading only. In our audit report. Acha, in that one will be an intro para, second will be all your key audit matters coming. Acha, in your intro para, you will write down what? So, introductory language. Key audit matters are those matters which in auditor's professional judgment were of most significance during the audit of current period financial statement. These matters are addressed in the context of financial statement as a whole, and we are not giving a separate opinion on those matter. This is the intro para. Okay, it's not a substitute for modified opinion. Then we have to describe each of the individual key audit matter. Why the matter was key audit matter and how did we deal with it? Why it was a key audit matter, how did we deal with it? Okay, there are some circumstances wherein the matter determined as key audit matter is not communicated. Why it is not communicated? Law or regulation precludes, or the basically adverse consequence of doing so will outweigh the public interest. If you communicate, the adverse consequences of doing so will outweigh the public benefit. Okay, now tell me, a matter which gave rise to modification or a material uncertainty related to going concern, they are matter which gave rise to modification or material uncertainty related to going concern, you would have definitely focused more there. They are as such a key audit matter, but they will not come under key audit matter because they are dealt with as per the separate essay. The matter giving rise to modification, SA 705 is there. Material uncertainty related to going concern is there, SA 570 is there. Even though they are by nature a key audit matter, they will not be coming under key audit matter. They will be dealt with as per the other standard, and here we'll give a reference of it. The matter giving rise to modification or material uncertainty related to going concern are by nature a key audit matter. However, they will not be described under key audit matter section. Rather, they will be reported as per the applicable essay and will include a reference in addition to the matter given under basis for adverse opinion section of the report. In addition to the matter given under basis for adverse opinion para, the other key audit matters are. We'll just give a reference of it that wo to hai hi hai, uske alawa these are the key audit matters. ठीक है, this is basically your essay 701. Let's see important questions. Okay, matter that required significant auditor's attention also may have resulted in significant interaction with TCWG. What are the considerations that may be relevant in determining the relative significance of matter communicated to TCWG and whether it's a key audit matter? Okay, so what are the considerations which are relevant? The importance of the matter to intended user, the nature of accounting policy over there, the nature, materiality, the materiality of corrected, uncorrected misstatement relating to it, the nature and extent of audit efforts needed to address the matter. If audit efforts needed to address the matter were more, it would be communicated to TCWG, it will be selected as a key audit matter. The nature and severity of difficulties in applying audit procedure, severity of control deficiency in that area, and matter involved a number of separate but related auditing consideration. So these are all points. These are all points. So what are the considerations that may be relevant to determine the relative significance of the matter communicated with TCWG and whether such a matter is a key audit matter, whether it will be a key audit matter or not, which points do we consider, importance of matter to intended user, accounting policy related to the matter, nature of materiality of corrected and uncorrected misstatements which can come up due to fraud or error, the efforts required to address those matter, the difficulties in applying audit procedure, control deficiencies identified over there, and number of, if the matter involved a large number of separate but related auditing considerations. Fine, this is done. Next question, question number 4. Next question, question number 4. Okay, now check over here. Question 4 is important. Question 4 is important. There's an implementation of ERP. There's an implementation of ERP and you have given more attention over there. So can I say that became a key audit matter? So whether ERP implementation done properly or not. So basically implementation of such a system and told him that such a matter may be a key audit matter. ठीक है. Now Mr. Vishnay considered the significance of matter, but he was of opinion that it has no link to the matter disclosed in financial statement. Now, key audit matter need not be related to a matter disclosed in financials. I repeat, key audit matter need not be necessarily related to a matter disclosed in financial. If it is not disclosed in financial, chalega. But our ERP implementation, we focused more, that becomes a key audit matter. Okay, the check over here. This is basically the explain requirement number 1. For determining key audit matter, what do we consider? उसमें significant event or transaction that took place during the period. ठीक है, तो check one line. I just want to say one line to you. Such matters may include matter relevant to audit that was performed, but that may not be required to be disclosed in financials. The key audit matter includes the matter relevant to audit, and it may not be required to be disclosed in financial statement. The example is implementation of this IT system. Implementation of this IT system. So even though this is not disclosed in financial statement, still it will be a key audit matter. The contention of Mr. Vishnay is not proper, as matter that do not link with the matter disclosed in financials can also be considered as a key audit matter. Next question is similar, I just leave it. Next question is actually similar, I just leave it. Acha, first wale mein they are telling you are The possibility of inability to obtain sufficient appropriate audit evidence is material and pervasive. You are unable to obtain sufficient appropriate audit evidence and the effect is material and pervasive. Adverse nahi. कौन सा? Disclaimer of opinion needs to be given. Correct. Disclaimer of opinion because you are unable to obtain sufficient appropriate audit evidence and the possible effect material and pervasive. Disclaimer of opinion should be given. And second question is, where will key audit matter come? So key audit matter will be coming where? The key audit matter will be after the basis for opinion para. उसके बाद if at all we have material uncertainty related to going concern, so after that material uncertainty related to going concern, but before management responsibility. It's before management responsibility. Achha, if there's an emphasis of matter also, the emphasis of matter you can put it before key audit matter or you can put it after key audit matter. But in simple words, key audit matter should come before management responsibility. Okay, so that was a question. Where do you show it? It's placed after basis for opinion but before management responsibility. If there's a material uncertainty related to going concern, it will come after that. After that. If there's an emphasis of matter, other matter, they may come before key audit matter or they may come after key audit matter. And if something is written in key audit matter, it will not be again written in emphasis of matter. If something is a key audit matter, it will not be coming again in emphasis of matter. Going to SA 705, any doubts till now? Okay, modification to opinion and independent auditors report. So this essay talks about the modified report. So we need to express appropriately modified opinion. We need to express an appropriately modified opinion when you conclude the financial statements are not free from material misstatement or you are unable to obtain sufficient appropriate audit evidence. Any of these two case or likha hai na, we need to give an appropriately modified opinion. Now sir, which opinion to be given when? There's a word called material and pervasive. Let me just come to the next page first. Okay, so when I have to give a modified report when financial statements contain a material misstatement based on the evidences which you obtained or you are unable to obtain sufficient appropriate audit evidence. In these two cases, there's a modification. Now, should I give qualified adverse disclaimer? Depends on its effect or possible effect. If you checked it, the word is effect. If you are not checked it, the word is possible effect. Okay. If the effect or possible effect is material but not pervasive, you checked it, effect material but not pervasive, qualified. You are not checked it, you are not allowed to check, but the possible effect material but not pervasive, it's qualified. The effect or possible effect material but not pervasive, it's qualified report. Achha, you checked it and the effect is material and pervasive, adverse. You are not allowed to check, and the possible effect is material and pervasive, disclaimer of opinion. The question comes, sir, what do you mean by word material? What do you mean by the word pervasive? Material is something which influences the decisions of users of financial statement. Now, pervasive ka definition. Pervasive is a term used in context of misstatement. It's a term used in context of misstatement to describe the effect or possible effect of misstatement on the financial statement. To describe the effect or possible effect of misstatement on what? The financial statement. Now, when do I say it's a pervasive effect? The pervasive effects are those which are not confined to specific element, account or item. That's not at one place but at many places. Or if it is at one place, it represents a substantial portion of financial statement. And in relation to disclosure, the disclosure is fundamental to the user's understanding of financial statement. If such disclosure is not done, which is fundamental to user's understanding, like going concern related disclosure not done, then it will be not just material, it will be material and pervasive. Fine. Okay. Now, consequence of inability to obtain sufficient appropriate audit evidence due to management imposed limitation after the audit is accepted. Okay, before the audit is accepted, if they put a limitation which will lead to disclaimer, I'll not accept the audit only. But after audit is accepted, now they are putting limitation. What to do? So first of all, they are telling the auditor's inability to obtain sufficient appropriate audit evidence can arise from 1. Circumstances beyond control of entity. 2nd, circumstances relating to nature or timing of audit work, you don't have time. Or 3rd, limitations imposed by management. So either like books are destroyed by fire or earthquake or there's a lockdown. So now can I say it's beyond the control of entity? Second, it's because of you don't have time. And third, it can be limitations because of imposed by management. If it's due to management imposed limitation, request the management to remove limitation. If management refuses, communicate to TCWG and try to do some alternative procedure. If alternative procedure say you are unable to obtain sufficient appropriate audit evidence, then if the possible effect is material but not pervasive, you give a qualified opinion. If the possible effect is material and pervasive, either you disclaim your opinion or you withdraw from engagement. Now, how do I give a modified report? What all changes come whenever I'm giving a modified report? Let me just directly go to the illustrations. Let me just go directly to illustrations. Okay, this is a qualified report. Under qualified report, यहाँ पे what all changes are coming? Title is same, address is same. Now, opinion para, instead of opinion, the word will come qualified opinion. So directly people can understand it's a qualified opinion. उसमें intro remains same. Now, in your actual opinion, in our opinion, to the best of information according to explanation given to us, except for the effect of the matter described in basis for qualified opinion section of the report, the financial statement shows a true and fair view. Achha, if you are unable to obtain information, the word will be except for the possible effect of the matter described in basis for qualified opinion section of the report, the financial statement shows a true and fair view. Okay, so this change. Then instead of basis for opinion, we'll write basis for qualified opinion. Why qualified? A full para added. And that 4 general sentences, the last line change. We believe that the audit evidence we obtain is sufficient appropriate to provide a basis for our qualified opinion. Acha, in your key audit matter, I told you matter giving rise to modification, they are by default a key audit matter. But we don't write them under key audit matter, we give a reference of it. So see, word, in addition to the matter described in basis for qualified opinion section of the report, the other key audit matters are management responsibility same, auditor's responsibility same, report on other legal and regulatory requirement, this will be modified accordingly. These are the changes when you have a qualified report. Okay, let me go to adverse. Adverse means similar changes. No difference at all. Directly come to disclaimer of opinion. So qualified or adverse, there are similar changes. Come to disclaimer of opinion. Okay, under your disclaimer of opinion, what are the changes coming? 1. Title same, address is same. Opinion की जगह directly we write disclaimer of opinion. उसमें intro para. Don't write we have audited. Intro para mein don't write we audited. We were engaged to audit. And in your actual opinion, write down we do not express an opinion on accompanying financial statement because of the significance of the matter described in basis for disclaimer of opinion section of the report. We were not able to obtain sufficient appropriate audit evidence to provide a basis for our audit opinion. Clear? Okay, now basis for opinion para, why disclaimer? That is added. Achha, 4 general sentences are removed. But the audit is conducted in accordance with SA, we are independent of the entity. That will come. वो कहाँ पे आएगा? In auditor's responsibility para. So यहाँ से it is removed, the 4 general sentences are gone. Achha, then you don't need a key audit matter. Why key audit matter not required? Because you are giving a disclaimer of opinion. Auditor management responsibility same. Auditor's responsibility instead of 3 big para, only 1 para. This is important. Auditor's responsibility instead of 3 big para, 1 para. Our responsibility is to conduct audit in accordance with standards of auditing and issue a report. However, because of the matter described in basis for disclaimer of opinion section of the report, we were unable to obtain sufficient appropriate audit evidence to provide a basis for our audit opinion. We are independent of the entity in accordance with ethical requirements which are relevant to audit, and we have fulfilled our ethical responsibility in accordance with these requirements. Okay, see, out of that 4 general sentences, audit is done in accordance with SA, ye aa gaya, and we are independent of the entity, ye bhi aa gaya. Out of 4 things, 2 things are here. Which 2 things are not there? So our responsibility as per this standard is given in a separate section, wo chala gaya, and we believe that the audit evidence we obtained is sufficient, appropriate, that is gone. Clear? The 4 general sentences don't come, and auditor's responsibility instead of 3 big para, only 1 para. Report on other legal and regulatory requirement will be modified accordingly. Okay, question number 1 over here. Check out, there's a limitation on scope imposed by the management. You are unable to obtain sufficient appropriate audit evidence due to a management imposed limitation. Just now we saw. Question number 2. Okay, during the course of audit, you obtain audit evidence of incorrect disclosure of related party transaction. Incorrect disclosure of related party transactions are there. How should you deal with it in the audit report, and different options which can be considered? Acha, there's an incorrect disclosure of related party. We checked it. We found there's something wrong. If the effect is material but not pervasive, qualified. Effect is material and pervasive, adverse. Either give qualified or you give adverse. 2 options, either qualified or adverse. Okay, next one, question number 3. CA Bahubali. CA Bahubali is a statutory auditor of Bharat Limited. During the course, Bahubali noticed the following: debtors amounting to 240 crore, no confirmation. No confirmation. Okay? They've done a provision of 40 crores. And the company has stated that the provision is based on receivable which are older than 39 months, which you feel is inadequate. Oh, so debtors which are older than 39 months, after 3 years and 3 months are gone, then you are making a provision. This you feel is not adequate, and you are unable to ascertain the carrying amount of trade receivables. 240 crore. Acha, inventory which is 38% of total asset. उसमें physical verification not done. Oh, so 38% of total asset inventory. Trade receivable is also very huge. So I can understand the effect is not just material, it's material and pervasive. Effect is not just material but material and pervasive. What kind of opinion should you give? See, you are unable to obtain evidence. यहाँ पे physical verification not done, you are unable to obtain evidence. Here also no confirmation was received, you are unable to know whether they are correct or not. So you should give a disclaimer of opinion. To check out answer, disclaimer of opinion has to be given. Clear? Okay, 4th question, there was an earthquake. Because of that there's a loss, and the financial statements and notes do not disclose the fact. Acha, so there's a going concern issue not disclosed only. Going concern issue not disclosed, the one disclosure not done, but it's fundamental for the user's understanding of financial statement. Give a adverse opinion. Give a adverse opinion. Adverse opinion needs to be given. Okay, this was SA 705 going to 706. This was 705 going to 706. Okay, SA 706 is emphasis of matter para and other matter para. An independent auditor's report. Emphasis of matter para, other matter para. Fine. First of all, coming to emphasis of matter para, it's a para which you included in auditor's report, which refers to a matter which is appropriately presented or disclosed in financial. Achha, it's already there in financial. We'll draw attention. It's a para which you added in auditor's report, which refers to a matter which is appropriately presented or disclosed in financial, and the matter is relevant for the user. It's fundamental for the user's understanding of financial statement. It's fundamental to users' understanding of financial statement. Achha, what's the other matter para? It's a para which you added in your auditor's report, which refers to a matter which is not there in financial statement. It's not presented or disclosed in financial statement, and the matter is important for the user to understand audit, auditor's responsibility, auditor's report. So this is for user to understand audit, auditor's responsibility, auditor's report. Above one was for the user to understand financial statement. Emphasis was something already there in financial. We'll draw attention to it. Well, right, we draw your attention to note number 10. And if a matter is a key audit matter already described there, don't put it in emphasis of matter. Okay. Now, emphasis of matter, we understood. When do we give this emphasis of matter? That is understood. Acha, for the emphasis of matter, it's adequately presented, disclosed in financial, so we are not required to modify the report, and it was not determined as a key audit matter. If it was determined key audit matter, it comes there, it doesn't come here. Okay. Now, how we will show it? Under the heading emphasis of matter, we are required to draw attention to clear reference to the note where it is, and we clearly write down our opinion is not modified for this matter. Our opinion is not modified for this matter. Now, circumstances where I give an emphasis of matter. There's some material uncertainty relating to litigation, but it doesn't affect going concern. Alerting users that financial statements are as per the special purpose framework. It will be there in notes. We'll draw attention. Some significant subsequent event. They've written a note. We are drawing attention. Early application of some accounting standard. They've written a note. We're just drawing attention. Major catastrophe. They've written a note. We are drawing attention. Okay. Other matter. Other matter. Now, other matter para again will come whenever that matter is not a key audit matter. If it's a key audit matter, it doesn't come here. Okay. And this is for the user to understand audit, auditor's responsibility, auditor's report. So where do I give this other matter para? The corresponding figures, the previous year's figures have been audited by other auditor. We have relied on their figures. We are clarifying our responsibility. Other joint auditor has given a separate opinion. We are clarifying there are 2 audit reports. Other information in document containing audited financial statement. That's okay. Third one, you can just cancel it. Uske liye there's a separate section now. Okay, so this is illustrative thing given. Okay, moving ahead. Check question number 3. Check question number 3. Question is just draft emphasis of matter para. So there's a income tax ka litigation going on. We are required to draft the emphasis of matter para. It's already there in your notes to account. So start with withdraw your attention. Withdraw your attention to note number 10 regarding income tax demand of this. Management based upon expert believes no demand liability will come up in addition to those which are already provided. Our opinion is not modified for this matter. So this is always to be written. Whenever you are writing emphasis of matter or other matter para, write our opinion is not modified for this matter. ये मैटर के लिए नहीं मॉडिफाइड है. ओके, क्वेश्चन नंबर 4. क्वेश्चन नंबर 4. Okay, the auditor of Colpi Private Limited was audit report was issued on 25th July. The case is filed on 4th with the civil court with respect to incidents caused in a factory in January. ठीक है, तो there is a litigation going on. They have disclosed it as contingent liability in footnotes. They have disclosed it as contingent liability in footnotes, and the management told Raj that such disclosure was enough, that he would be going to describe it. Acha. So they have just written it in footnote, basically regarding contingent liability, and they said that auditor is anyways going to write about it in emphasis of matter para. Auditor is further going to describe it in emphasis of matter para. Acha, so first of all, when you are writing emphasis of matter para, it's not a substitute for a disclosure in financial statement. It's not a substitute for a disclosure in financial statement. Contention of management, whether it's valid, that is one thing. And 560, basically the court case coming up after the date of audit report. After the date of audit report, a court case has came up, uske related. Achha, you found something after the date of audit report. Had it been known earlier, you would have given a different opinion. SA 560 over here. SA 560 over here. So if management is ready to amend the financial statement, we basically have it that way. If management does not take necessary action to ensure that those who have received the audit report earlier, they are informed of the situation, then you need to take appropriate action to prevent reliance on your report. And over here, emphasis of matter, to check out. The management has presumed that auditor was going to provide a description of court case and its outcome in emphasis of audit report, and they felt there is no further additional disclosure required in financials. This is not valid. This is not valid. Emphasis of matter cannot be substitute for a disclosure in financial statement. It cannot be a substitute for a disclosure in financial statement. Next one, SA 710. Comparatives. Comparative. We have current year figure, we have previous year figure. Question comes, are we reporting only on current year, are we reporting on both? There are 2 approaches. One is called as a corresponding figure approach. Second is called as a comparative financial statement approach. Under corresponding figure approach, the prior period, the previous period figures are considered as an integral part of current period financial statement. So whenever we say we audited the current period financial statement, it includes the previous year figure as well. And no need to specifically write. No need to specifically write we audited balance sheet as a 31st March 23 and 22. नहीं ऐसा नहीं लिखना है. 31st March 23 balance sheet includes 22 figures. They're an integral part. So here you mandatorily report on both the figures and no need to specifically mention about the previous year figures. But under comparative financial statement approach, the previous year's figures are given only for the purpose of comparison. They are not integral part of current period financial statement. So under this, when I say I've audited current period financial statement, it's only the current year figure. So if you're auditing both, you have to specifically mention. So if you're auditing both, you have to specifically mention. The here generally your report is only on current year figure. You may report on both. If you're reporting on both, you have to specifically mention about it. Achha, now sir, which approach to be chosen will be decided by law or regulation. If law or regulation is silent, management. So management need to tell you why are they giving the previous year figure as an integral part or just for the purpose of comparison. Okay. And as per Companies Act, corresponding figure approach is used. As per Companies Act, corresponding figure approach, we mandatorily report on both the things. Now suppose, if at all you are required to report only on current year figure, तो problem नहीं है. You check current year, चलेगा. But if you are reporting on both, the question, should I check both? So if last year you were only auditor, तो no problem. But if last year someone else was auditor, and you are reporting on both, you are entitled to rely on previous auditor's figure. Okay, so under corresponding figure approach, you have to mandatorily report on both if the prior period financials were audited by some other auditor and if you are permitted by law or regulation, then to refer to the predecessor auditor's figure and you decide to do so. The law or regulation allows you to use the previous auditor's figures and you decide to do so, you should state in other matter para. So other matter para I need to write down that the figures of preceding period were audited by another auditor. He had given this kind of report on this date. ठीक है. अच्छा, suppose your opinion on previous year figure differs. From the earlier auditor or you only in last year. You need to write about the difference of opinion in other matter paragraph. ठीक है. अच्छा, in a comparative financial statement approach, you're reporting only on current year. If preceding figures are audited by no one, you write down that the previous year's figures are unaudited. But this will be only in comparative. In corresponding figure approach, you have to mandatorily report on both. So indirectly, you'll be reporting on both only. यहाँ पे भी reporting only on one. Previous year unaudited है, write down they're unaudited. ठीक है. Now, the objective. The objective of auditor are to obtain sufficient appropriate audit evidence whether the comparative information is in accordance with the requirement. So whether they are giving comparative as per the requirement, whether corresponding figure or comparative financial statement approach, and then you report. Okay, the audit procedure, this is important. So you need to determine whether the financial statement include the comparative information as required by applicable financial reporting framework and it's appropriately classified. To obtain sufficient appropriate audit evidence basically for that. Okay, so what do you evaluate? You evaluate whether they agree with the prior period. They reflect accounting policies which are consistent with the prior period. And if any policies are changed, it has been properly accounted, presented, disclosed. And if you become aware of a possible misstatement while checking the prior period, while checking current year, you feel that there might be some misstatement in prior period, you perform additional procedure. If you become aware of possible misstatement in the comparative information while performing current period, you should basically do some extra procedure and take a representation for each of the period for which you are reporting. If you are reporting for both period, the representation should also be for both period. Okay, so I need to basically determine whether the financial statement include comparative as per the applicable financial reporting framework, plus the information is appropriately classified. You evaluate whether they agree with the prior period, the policies are followed consistently or not, and if you become aware of possible misstatement in prior period, okay, you're doing current year audit, but prior period में कुछ गलती मिली, go in depth now. Now reporting. Okay, whenever you are using a corresponding figure approach, you mandatorily report on both the figures, but no need to write we audited balance sheet as at March 23 and March 22. When you write balance sheet as at March 23, it includes March 22 figures. So no need to specifically refer to corresponding figure. But last year ka audit report was modified. Matter is unresolved. last year's audit report is modified, matter unresolved. Now it may have an effect on current period figure, or it may not have an effect on current period figure. The last year report was modified, last year data is wrong. Achha, if it affects current year also, then in current year you give a modified with respect to both the figures. Last year galat tha, this year is also wrong. We are reporting on both, modified with respect to both. But if it does not affect the current year, the previous year is wrong, current year is correct. It does not affect the current year. So now what to do? It does not affect current year. Now what to do? Still, you are reporting on both. Even if one is wrong, you need to give a modified report in current period with respect to previous year. Give modified in current year with respect to the previous period figures. Acha, so see, as such, I don't refer to corresponding figure, but can I say यहाँ पे I referred to corresponding figure? ये exception है. Same way, a material misstatement exists in prior period on which an unmodified opinion was there. Last year there was a clean report, but now I found there's something wrong in last year. Okay, it doesn't affect current year. If it doesn't affect current year, I will still give a modified report in current year with respect to corresponding figure. Okay, the question comes, normally under corresponding figure approach, you don't refer to previous year figure. Is there any exception? तो यहाँ पे this case and this case, we are specifically referring it. तो यहाँ पे we are giving modified with respect to both. यहाँ पे we are giving modified with respect to previous year. यहाँ पे we are giving modified with respect to previous year. So we are basically specifically mentioning about it. Okay, question number 2. There was a provision for doubtful debt not done last year was modified. What if they do a provision this year? Achha, last year provision not done. Achha, this year also they don't do. So you are required to modify the report for both the figures because it affects current year also. But now this year you've done a provision. If you've done a provision, still last year data is wrong, so still I will be giving a modified report with respect to previous year's figure. ठीक है. Now going to SA 720. After that 800 series. Okay, SA 720, auditor's responsibility in relation to other information. It's other information which is there in your annual report. Okay, you are not required to give opinion on other information in annual report. Like annual report includes your audited financial, उसके साथ साथ director's report, management discussion analysis report, corporate governance report. So many other things are there in annual report. So they are talking about your responsibility for other information in annual report. You don't have to give an opinion on other information. But this SS says you need to read the other information to identify whether there's a material inconsistency. Between the audited financial and other information. Or there's an inconsistency between basically your knowledge about client and the other information. So either there's an inconsistency between financials and other information, or something which is not there in financial, only in other information. But my knowledge was it should not be this, it should be different. So there's a inconsistency between your knowledge of client business and other information. So read the other information. And other information includes amount as well as other item. Other information includes amount and other item. Amounts are basically the figures, other items are basically descriptive sentences, etc. kind of. If at all I see accounting policy, वो आएगा other item. If at all I see description of some terms of related party, it comes under other item. But if I see the amount, it comes under amounts. And this responsibility of yours to read the other information is mandatory, whether the other information you get it before you give your report, or sometimes you might not have that other information ready. You get the other information after your report is given. Okay, this standard does not apply to preliminary announcement of financial information because that's not the final thing. And prospectus mein this is not applicable. It's only for other information in annual report. Moving ahead, so first you need to obtain the other information. Other information in annual report you need to obtain from management. So first of all, decide what document comprises the annual report. Make appropriate arrangement with the management. Make appropriate arrangement with the management to obtain the final version of documents. Sometimes when you're giving audit report, the entire annual report is not ready, few things they might give you, tell them to give the remaining things later. So when some or all documents are not available till the date of audit report, request management to provide a written representation that the final version will be available to auditor whenever ready. So take a representation, they'll give you the final version whenever ready. Okay, so first you obtain the other information. Now you need to read the other information to identify a material inconsistency between other information and financial, or there's a material inconsistency between other information and your knowledge obtained during audit. Okay. Now if at all you identified basically some material inconsistency, so either the problem is there in other information, or a problem is there in financial, or a problem is there about your knowledge of entity. Three things. Okay, if a problem is there in other information, if other information is wrong, tell the management to rectify it. Tell the management to rectify it. If they rectify it, check it out, check the rectification. If they refuse to rectify other information wrong, they are not rectifying, then in your audit report you write about it. There is a separate section in your audit report for the same. So if it's prior to the date of audit report, then in that case you are required to write about it in your audit report. Prior to the date of audit report, considering the implications for your audit report may likh lo, or you may withdraw also from engagement even though other information is wrong. Acha, second, if you get to know about it after the date of audit report, because sometimes I told you the annual report is not ready, data comes after the audit report, then in that case what do? First, request the management to correct it. If they are not correcting, you bring it to the attention of users. You take appropriate action, bring it to the attention of users that this other information is wrong. So read other information to identify a material inconsistency between other information and financials, or there is something coming in other information, not a part of financial, but according to you, it should not be like this. So it is material inconsistency between other information and your knowledge about client's business. Achha, if other information is wrong, request management to rectify. If they are not rectifying, report not yet given, write about it in your report or withdraw. Report already given, take appropriate action, bring it to the attention of users. Achha, now, if other information is correct, financials are wrong, you came to know about it. Okay, so if financials are wrong, you come to know about it, report not yet given, SA 705, report already given, then SA 560. Okay? Achha, if your knowledge about client's business is wrong, SA 315. Now coming to reporting. If other information was wrong, report was not yet given, I told you we can write it in our report. There's a separate section under the heading called other information. Okay. For a listed entity, we'll write down these are the documents which we obtain and this which we will obtain in future. This which we obtain and this which we will obtain in future. For unlisted, talk about only the documents which you obtained. Listed may you talk about what you obtain and you expect to obtain. For unlisted, only talk about what you obtain. Don't talk about what you expect to obtain. Okay. Then you write down basically in that management is responsible for the other information. Identification of other information, what constitutes other information and what you obtain till the date of audit report, what you expect to obtain afterwards, that's only for listed entity. Statement that your opinion does not cover the other information, you're not giving opinion, but you are responsible to read the other information to identify the material inconsistencies. And whenever any other information has already been received, receive ho gaya, and usme agar inconsistency hai, so you write, this where the inconsistency, all you write, we have nothing to report. The statement that auditor has nothing to report, or you write down basically what are the inconsistencies which are there. Clear? Okay, check over here. This is an extra para that will come in your audit report. Information other than financial statement and auditor's report. The company's board of directors is responsible for other information. Other information includes report X, but does not include financial statement and auditor's report. Our opinion on financial statement does not cover other information. We do not express any assurance on them. In connection with audit, our responsibility is to read the other information and see whether they are materially inconsistent with financial statement or our knowledge obtained in audit, or whether they are materially misstated. Achha, if based on work we have performed, we conclude there is a material misstatement in other information, we have to report the fact. If based on work what we have performed, if we find there's a material misstatement in other information, we are required to communicate the fact. So here we have nothing to report in this regards. Clear? Okay, question number 2, November 19. Question number 2, November 19. Okay, give examples of amounts and other items which are included in other information. I told you other information includes amount and other items. Amount is figures, other items are some policies, terms of contract, etc. kind of it. So check out, this is the thing given: amount, summary of key financial results, some operating data, special items like asset disposal, litigation provision, impairment, etc. Liquidity and capital resource key information, capital expenditure, then guarantees, etc., ratios related to financial things. These are all amounts. Other item, explanation relating to certain assumptions or estimate, identification of related party, description of transaction with them, description of nature of off-balance sheet arrangement, description of the type of guarantees given, description of the litigations which are going on, overview of the strategy, description of the trend in market. So these are basically your other items. Clear? Okay, going to question number 3. Okay, check out over here. You are going through a draft annual report and you found out it indicates a downward trend in market price of raw material. There's a downward trend in market price of raw material. The actual profit margin has actually gone up. There's a downward trend in market price of raw material as compared, but the actual profit margin has gone in a reverse direction. You see, raw material going down, profit should go up. Raw material has gone down, but profit has not gone up. Profit has also gone down. So you discussed with your partner is telling we are not concerned with all these things what they disclose in annual report. His partner is telling we are not concerned with all these things they are reporting in annual report. Is the partner ka view correct? Answer is no. SA 720. The partner's view is not correct. Clear? This is your SA 720. Come to 800. 800, 805, 810, 3 more to be done. Okay, 800 is specialized areas or specialized services. Okay, the 800 series is specialized areas. Usme 800 is audit, which is basically as per a special purpose framework. Normally, the financial statements are general purpose, considering information need of wide range of user. These are financial statement in accordance with special purpose framework. You're called upon to do audit of financial, which are as per a special purpose framework, considering information need of a specific user. I wanted a loan. They say, sir, do one thing. We are ready to give you loan, but we don't understand this financials based on accrual. Give me financials based on cash basis. So I am preparing financials based on cash basis only for the purpose of getting loan. Achha, you are called upon to do audit of that financial statement. Should you accept? Answer is yes. You may be the normal auditor, you may not be the normal auditor of the company. You may be the auditor of a general purpose financial statement, or you may not be. If someone calls you to do audit of financial statement prepared as per special purpose framework, can I accept? Answer is yes. Is it necessary I should be the auditor of general purpose also? No. ठीक है. Now the objective over here is one, whether I should accept such an engagement, how do I plan and perform, and how do I give opinion. Okay, special purpose financial statement is prepared as per special purpose framework. Special purpose framework is meeting the information need of specific user. Okay, so whether I should accept such a audit, so normal, just see terms of engagement, SA 210. So try to understand the purpose for which financials are prepared, the intended user, steps taken by the management to ensure that the applicable financial reporting framework is acceptable. If they used acceptable financial reporting framework, you can do it. Planning and performing the audit is normal, SA 200, 315, all things normal, routine. How do I give a report? How do I give a report? Now see, it will be written in notes. It will be written in notes to accounts that these financial statements are as per the specific purpose. They are basically prepared in accordance with the special purpose framework, in accordance with the requirement of this user. So you draw attention to it. The audit report shall also describe the purpose for which financials are prepared, intended user. Achha, if management has a choice of framework, if management has a choice of financial reporting framework, choosing a financial reporting framework which is acceptable will also be a responsibility of management to add it in management responsibility para if they have a choice of framework. If management has a choice of financial reporting framework, determining a framework which is suitable or acceptable will be the responsibility of management. Okay, you put an emphasis of matter para alerting users that the financial statement are as per the special purpose framework. They are basically prepared for this is user, and our report is solely for them, not for anybody else. Okay, the only thing is emphasis of matter will come up, other things are fine. Okay, the check over here. They are preparing financial statement in accordance with the provisions of contract. So can I say it's a compliance framework? Don't write the word true and fair. Opinion para also. The financial statement have been prepared in accordance with clause Z of the provisions of contract. Opinion para also, the financial statement have been prepared in all material aspect in accordance with provisions of clause Z of the contract. Don't write the word true and fair. And you're giving an emphasis of matter para. We draw your attention to note number 10, which describes the basis of accounting. The financial statements are prepared to assist ABC Limited to comply with the provisions of the contract. Our report is solely for ABC and DEF, should not be used by other party, and our report is not modified for this matter. We are not modifying, we are just drawing attention. Okay, give examples of special purpose framework. Okay, give examples of special purpose framework. 1. The cash receipt and disbursement base of accounting. Do you follow a cash receipt and disbursement base of accounting for getting a loan? Okay. The financial reporting provision established by regulator to meet the requirements of regulator. When you're planning IPO, the SEBI requires you to file your financial statement which are basically kind of adjusted ones. So financial reporting provision established by regulator to meet the requirements of the regulator. Then financial reporting provisions of contract, which is based on a contract case up, so you are preparing. These are special purpose frameworks. Okay, question 2, mark it as important. Question 2, not written, but mark it as important. Okay, now you are basically appointed to do audit of a financial statement which is as per the provisions of a contract. What consideration would be taken while planning and performing audit? Okay, special purpose framework wala audit, what consideration will be taken while planning and performing? So 1, you need to obtain understanding of entity selection, application of accounting policy. Okay. So in case financial statements are as per the provisions of the contract, I need to obtain understanding of the provisions of the contract. Second, you need to comply with all the relevant essays. If you feel that provisions of contract say something else, I need to deviate from essay, you do the alternative procedure. Application of some of the requirement of essay in audit of special purpose financial statement may require a special consideration. Like suppose the special purpose framework which we have decided, they say that below 1 lakh any errors are there, no need to rectify. Below 1 lakh any errors are there, no need to rectify. That's given in contract. Contract bol raha hai, okay, you prepare financials like this, but below 1 lakh any errors are there, no need to rectify. Now does it mean that 1 lakh is materiality? Answer is no. The contract may tell you below 1 lakh, no need to correct the things, but still you need to consider the requirement of SA 320 materiality. So, for example, SA 320 judgment about matters that are material are based on common financial information need, but here what is material will be based on the needs of intended user. So here what is material will be based on needs of intended user. Acha. In case of special purpose framework, such as those prepared in accordance with contract, there may be a threshold given below which the misstatements identified need not be corrected. I gave you below 1 lakh, don't correct it. Existence of threshold does not relieve the auditor from basically determining materiality as per SA 320. The existence of threshold does not relieve auditor from the requirement to determine materiality as per SA 320. Okay, communication with TCWG is done in accordance with SA, but in case of a special purpose framework, it is possible they might not be asking us, we might not be doing that communication with TCWG. This is how we plan and perform audit. There was a question on this D point. If contract says below 1 lakh not to be rectified, so do we need to determine materiality as per 320? Answer is still yes. It does not relieve you from determining materiality as per 320. Okay, SA 805. SA 805, special consideration. It's an audit of a single financial statement or a specific element or an item of financial statement. Either it's a single financial statement or a specific element, account or item of financial statement. If you are called upon to do audit of single financial statement or only single item, can you accept? Answer is yes. You may not be the auditor of complete set. You may not be the auditor of complete set. It's not necessary. The single financial statement, for example, a cash flow, or a specific element, for example, only cash in bank, includes the related notes. Fine. Objective, whether I should accept, how do I plan, how do I give opinion? 3 things. Okay, so you can accept such an audit irrespective of the fact whether you are doing a complete set or not. Whether you're doing complete set or not, you can accept such an audit. Okay. Other things are all fine. Directly come to reporting. Acha. If auditor is engaged to report on a single financial statement or a specific element in conjunction with the complete set. If you are also called to report on complete set and a single financial statement or specific item, then you issue 2 separate reports. Give separate opinion. Okay. The audited single financial statement और audited specific element may be published together with the complete set. वो complete set के साथ may be published, may not be published. ठीक है. If report on complete set is modified, complete set modified है. Okay, the single financial statement or a single element. So you need to consider the effect it may have on a single financial statement or a specific element. ठीक है. अच्छा, modified कैसा है? It's modified or it includes emphasis or other matter. The complete set is modified or includes emphasis or other matter. You need to consider its impact on a single financial statement or the single element. ठीक है. अच्छा, तो if complete set is qualified, a single financial statement can be clean. If complete set is qualified, single financial statement can be clean. If complete set is qualified, a single element can be clean. उसमें problem नहीं है. That can be unmodified. अच्छा, if a complete set is adverse or disclaimer. If complete set is adverse or disclaimer, then they are telling, if at all that complete set and that single financial statement or a single element, they are to be published together. वो साथ में publish होने वाले हैं. Report on complete set, report on that single financials. If they are to be published together, then that single financial statement or a single element cannot be unmodified. It cannot be unmodified. Okay, so if complete set is adverse or disclaimer, then single financial statement that forms part of those financial statement or specific element that forms part of those financial statement, that cannot be unmodified. But if at all they are not to be presented together, then that single element can be unmodified. Okay, complete set is adverse or disclaimer. Acha, report on single financials or basically a single element, they have to be published together. So single element, single financials cannot be unmodified. Acha, now complete set adverse or disclaimer. Now complete set and single financials or single element not to be published together. If they are not to be published together, still single financial statement cannot be unmodified, but single element can be unmodified. So in this case, the specific element, if you feel it should be unmodified, it can be there if it is not prohibited by law and they are not published together, and it does not constitute a major portion of the complete set. Acha, so if published together, तो single financial statement, single element cannot be unmodified. If they are not to be published together, single financial statement still cannot be unmodified, but single element can be unmodified. I hope this is clear. The auditor shall not express an unmodified opinion on single financial statement of a complete if auditor has expressed a adverse opinion, even if they are not published together. So even if they are not published together, single financial statement cannot be unmodified, but single element can be. Clear? This is done. Going to the last standard. उसके पहले question number 1. Give example of specific element, account or item. किसको बोलेंगे specific element, account or item? Trade receivable, PP, leasehold property, employee bonuses. These are all specific element or account or item of financial statements. ठीक है. Going to the last standard, essay 810. Going to the last standard of the day, not day, actually this session. We have a session in evening again. Okay, 810. Engagement to report on summary financial statement. Engagement to report on what? Summary financial statement. You're called upon to give a report on summary. You're not called upon to prepare summary. If you're called upon to prepare summary, it will fall under SRS. You're called upon to report on summary financial statement. Acha, imagine if the complete set, if complete set is done by you, then only you can report on summary financials. Acha, so 800 and 805, even though you have not done a complete set, you can be the auditor. But here you can be auditor only if you have done a complete set. Okay, so check over here. Summary financials are historical financial, which is derived from normal financial, but contains less details than the financial statement. It contains less details than the financial statement. Objective, whether I should accept, form an opinion or express opinion. Fine. Here the acceptance of audit is important. Engagement acceptance important. You can accept only when you have been engaged to conduct the audit of financial statement. Financial statement is a complete set from which the summary has been derived. Okay, then only you can accept it, otherwise you can't. Plus, before accepting, for preparing summary, they would have applied certain criteria. So we need to ensure the criteria applied are acceptable. Management agrees and they acknowledge their responsibility for preparation of summary financial statement. Making available the audited financial statement to the user, audited is full, to the users without undue difficulty, and to include the audit report on summary financial statement, whenever the summary financial statements are going. So wherever summary financial statements are going, उसके साथ उसका report of summary financial statement has to be there. Plus, you agree with the management the form of opinion to be expressed on summary financial statement. So when I should accept, when I am the auditor of the complete set, then only I can accept. Otherwise, I cannot accept reporting on summary financial statement. Okay, nature of procedure. So we need to evaluate whether the summary financial statement adequately disclose the summarized nature, and they identify the audited financials. So see, summary financial statement, it should be written, they've been derived from this. So they identify the audited financial statement. Acha, when summary financial statement are not accompanied by the audited financial, so they need to describe from where the audited financials are available, or if law or regulation doesn't allow users to get that, so write that law or regulation doesn't allow to get the audited financials. Okay, they should adequately disclose the criteria, how they have summarized. It should agree, the summarized financial should agree with the audited financials. They should have been prepared in accordance with the applied criteria. And it should contain necessary information to ensure it's not misleading. And you need to evaluate whether it's available to the intended user without undue difficulty. The complete financials, if someone wants, it's available to user without undue difficulty. Now, if at all you feel the summary financial statements are consistent with the audited financial statement, you give an unmodified report. So unmodified means what do we write? We don't write word. Basically, if it's a compliance framework, so we write the summary financial statement are consistent with the audited financial statement in accordance with applied criteria. Or we write the summary financial statement are a fair summary of the audited financial statement. Any of these two things. Acha. Now, when I should be giving a report on summary financial statement, once I have obtained evidence that they are a fair summary or they are consistent with the audited financial statement, then only I should be giving it. Acha, now see, year ended, you gave an audit report on complete set. Then you gave an audit report on summary. So here subsequent event only up to the date of audit report on audited financial is considered. Subsequent event from the date of audited financial to the date of summary financial is not considered. So check out when the audit report on summary financials is dated later, the auditor should state that the summary financials and audited financial do not reflect events which have occurred subsequent to the date of auditor's report on audited financial. So subsequent event till the date of complete set wala audit report is only considered, not till the date of audit report of summary financial. Okay. Now coming to your report, you need to identify the summary financial statement including title. Identify the audited financial, refer to the auditor's report on audited financial, that audited financial ka audit report was of this date, this kind of opinion was given on that audited financial. Okay. And you have to write a caution statement. Reading a summary is not a substitute for reading the audited financial statement. वो आपको एक लिखना है. Management is responsible for preparing the summary. We are required to give an opinion. Clearly express your opinion. Signature, date, place, that all will be coming. That's fine. Acha. It is possible that summary financial statement, the auditee may be different. Auditee may be different. I may address it to, say for example, the board of director. The audited financials was addressed to the shareholders. This may be addressed to the board of directors. Now, modification to opinion in audited financial. If your complete set is modified, imagine qualified, emphasis or other matter. Okay, qualified, emphasis or other matter, then in that case, still the summary financial statement may be consistent with the audited financial statement. तो आप लिखोगे summary financial statement are consistent with the audited financial statement. But sir, what about the qualification, emphasis of matter, other matter which was there in the audited one? Write about that in the audit report of summary financial statement also. So when audit report on audited financial contains a qualified opinion or an emphasis or other matter, but you are still satisfied that it is, the summary is consistent or a fair summary, what do you do? It is in accordance with the applied criteria, वो बराबर बनाया है summary. The audit report on summary financial statement shall state that audit report on audited financial includes a qualified emphasis or other matter. Describe that basis for qualified opinion or that emphasis of matter or other matter para and the effect on summary financial statement. ठीक है. Now, if your audited financial is adverse or disclaimer, then in that case you cannot report on summary financial. Then in that case, so you write down that the audit report on audited financial contains an adverse or disclaimer. Provide the basis for adverse or disclaimer of opinion para and state that because of adverse opinion or disclaimer of opinion, it's inappropriate to express an opinion on summary financial statement. Clear? And see, I again tell you, essay 810, you can be the auditor only if you are auditor of the full-fledged financials. ठीक है. Restriction on distribution or use, you may basically put it by way of a other matter paragraph. Check out over here. This is fine. Chalo, both this is fine and this is fine. Done. This is your SA 810. We are done till 800 series. We are left with SAE, SRE, SRS. Okay, that, and that will be doing it in evening session. Plus I'll finish off in evening session one more thing, that is your professional ethics. Plus I'll also finish up Caro in evening. The evening session, and then tomorrow evening 2 more sessions basically for completing your entire auditing revision. Again telling you, this is an in-depth revision. We are covering all theories plus all important questions which have been marked. That's it for now. We'll meet again in evening. Any doubts anybody is having, tell me. So this session, first half is over. Second half, we'll be doing it in evening, 5 p.m. to 10:30 p.m. And remember one thing. Starters are many, but finishers are few. Starters are many, finishers are few. You are on the verge of finish line. Just make sure that you are not taking it lightly at this stage. Last 10-15 days of yours are pending. That's it. Last 10 days of yours are pending. Give best of your efforts in this last 10 days. Chalo, see you in evening 5 p.m. Till then, do your studies here. Enjoy nahi karna hai. Just make sure you are studying and you are taking bit of rest also, and you are fresh again in evening at 5 p.m. Bye bye everyone.